It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a
What is the TP family and how do you become part of it? Don't worry. If you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple. Education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading. What is the TP family and how do you become part of it? Don't worry. If you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple. Education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading. What is the TP family?
All right. Good morning, good afternoon, and good evening, wherever you guys are tuning in from. Really excited to be with you guys today, and welcome once again to another week of the TP Masterclass. Really excited to be with you guys, especially because last week I actually wasn't around. I was just away, but I'm really excited to be back this week. For those of you guys that don't know who I am, my name is Willis Arome. Somebody who's been trading now for coming up to 4.5 years, and very excited specifically because I'm going to be covering a segment which personally is my favorite because we're focusing on the mind and we're focusing on growth. But before we go anywhere, I just want to welcome every single person to the call. whether you're tuning in from where I am. I'm currently based in Kent in England. So in fact, whilst we're on that topic, I want to ask where every single person is tuning in from. I know we get quite a few people from all over the world. So where is every single person tuning in from? So far, so good. I've seen Uganda. I can see Uganda in the chat. So let us know where you guys are all tuning in from. Have I got this country wrong? Is that South Sudan? Is that correct? Let me know if that's correct. If not, NYC, welcome to the call. Welcome. Kenya, keep the messages coming in, guys. Where are you guys all tuning in from? We've got Niger in the house, and we have South Africa. Welcome. Amit, welcome to the call from India. Welcome, David from Ghana. Who else do we have? We got Nigeria in the house, of course, as we already know. We've got Kenya. Yeah, South Sudan. That's correct. Thank you for confirming. We've got Rwanda in the house. Rwanda. How's it going? All right. Do we have any other countries, whoever's tuning in from different parts of the world? Is anybody tuning in from the UK, though? I want to know. I'm just curious. Let's see. DRC Congo. Welcome to the call. Haiti. We've got South Africa. Much love and much blessings to you too also. Who else is tuning in from anywhere around the world? We've got India in the house already. Welcome. Okay. Who else do we have? Welcome to the call, Yvette. Okay, so as we continue, we've got Ethiopia in the house. This is probably going to keep on rolling, so I'm probably going to miss a lot of countries as we continue to do this. But as you are just tuning in, if this is your first time on the call, welcome Cameroon, Kampala. Kampala is in Uganda, I believe. Correct me if I'm wrong. But welcome to the call once again. If you're just tuning in, welcome to the call. This is the TP Masterclass, which we do weekly, okay? And yeah, I just wanted to first of all start off with this reminder because it's very important, especially if you're brand new to this call and if you've been tuning in now for a couple of weeks. But a reminder that the reason why we are doing this masterclass is because we are training even ourselves, even myself. I'm being trained as I'm speaking to you, as we are listening to all of the segments we're about to go through today, right? We are training ourselves to fix our minds, to, change our habits, to improve the way we think, to make better decisions when it comes, especially to our trading. But bearing in mind that it's not just necessarily only about trading. These skills, these topics, these subjects, everything that we're going to be discussing today is things that we can utilize to improve our lives for the better. Okay. So if we can fix our mind, if we can fix our idea, especially when it comes to money, especially when it comes to decision making in the markets, when it comes to trading, we will have better decision making and better results as a whole. Okay, so that's one thing that I wanted to share. And I shared this a couple of weeks ago, especially when I started this book summary, is that we're not only just doing this book summary because we just wanted another segment. No, we're doing this specifically because we are trying to become a creature of habits. If somebody is in this room or in the group, wherever you're tuning in from, and doesn't necessarily like to read, I'm somebody who's a testament to that. Never really liked to read books. I didn't like necessarily to read. However, understanding that the content that we're speaking about today is pushing even myself to not just read, but also to take in the content, to apply everything that we're speaking about, everything that we're learning, in order, as we mentioned before in the beginning, to make better decisions, to have a better mindset, in order to obtain the results that we're striving to have at the end of the day. All right. So without further ado, we're going to jump straight in to the first segment, a segment that I'm super excited about, which is the book summary of the book we are currently reading, which is The Psychology of Money. All right. So before we continue, I'm just going to make sure that my screen is shared, and then we'll basically take it from there. All right. So you guys can hopefully see my screen. Let's just make sure that's all set up. All right. Anyway, let's get started. So just to briefly touch on last week, especially for those who were on last week, it was an amazing segment when we spoke about chapter 7, which speaks about freedom, right? I'm not going to go too deep into it, but last week we spoke about freedom and what freedom actually looks like. The majority of people believe freedom is about the money and the ability to obtain materialistic things. which is couldn't be further from the truth, especially with what we see a lot on social media and the illusion that is being created. All right. However, the money that we have and that we're trying to strive for, it should be that it buys time, right? It buys time, and it also enables us to have more options. Okay. I'm not going to share too much because I'm going to dive into chapter 8, which very much kind of relates to everything that we're going through today, right? But the ability for money to buy time, not just assets and not just materialistic things, but it buys time and it gives you options to do other things as well. But more than that, one of the key takeaways is that when it comes to freedom, freedom is the highest form of wealth. Okay. The ability to make decisions without having a burden of money, of less time. Okay. Money should buy time and options and not just materialistic things, something that I've already shared. Okay. And knowing what enough is, and how to know what enough is somebody is the difference between two people. One person that has goals, specific goals that have been defined, and goals that they've actually taken the time to think about, and not something that they've copied from other people. And the person who just hasn't done that at all. That would be the difference between knowing what enough is for you. And last but not least, the flexibility that allows you to have, a better life and better decision making. All right. So that was chapter 7. And this week, I'm excited to go through chapter 8, which is the man in the car paradox. All right. So let's just make sure we got our screen shared. All right. Let me just make sure that's all set up for you. Just give me 1 sec and we'll get that all loaded for you. Okay, so let me know if you guys can see. If not, just let me know. All right, so whilst we're just doing that, if we have anybody who's brand new to the call, I can see some people are still posting. Okay, so we have Lucia from Ghana. Welcome to the call. Okay, let's just make sure that everything is all loaded. All right. Okay. Okay, so right. So what I'm going to do is we'll get straight into the segment just for now. Okay. Okay, perfect. Here we go. So if you guys can see the screen, just type some number ones in the chat. Okay. Type some number ones in the chat if you guys can see, if you guys can hear me loud and clear. We'll just continue straight into it. All right. Okay, so let's just get started. So the title of chapter title of chapter 8 is called Man in the Car Paradox. And what this is basically entailing is the idea that when somebody is looking at somebody else's success per se, or the perception of what that person understands to be success, it might be somebody driving a nice car, it might be a possession that they have, it might be a watch. For the females in the room, it might be a bag, it might be the idea that they've managed to, I don't know, retire their parents, or they've obtained a certain level of wealth, but it looks like that in the form of materialistic possessions, right? Now, the person who's actually looking at that, I'm going to use myself as an example, right? I'm looking at the person with the objects or the things that they have. And the first thing that usually comes to mind, if I'm going to be completely transparent and honest with you, is not necessarily, wow, that person is so successful, I wonder what they did to obtain that level of wealth. No, in fact, most of the time, the first thing that comes to mind is, I wonder what I would look like if I was the person wearing that particular watch, or if I was the person driving that particular car. I wonder what it would look like if I was the person who had managed to retire my parents at such an early age that they no longer need to work. I now begin to place myself in the other people's items. Does that make sense? So that's the idea of the man in the car paradox. And what this chapter basically kind of shares is the fact that oftentimes we're not necessarily thinking about, wow, this person has obtained a certain level of wealth that I admire. What did they do to obtain that wealth? But in fact, we're actually thinking about, what can I do to be in that person's shoes? Now, don't get me wrong, it's not necessarily the worst thing in the world, but you also have to think about the attitude and the mindset that brings that kind of understanding towards things. Okay. So oftentimes what we tend to do is we desire the status and the respect that comes with those items rather than what it took for the person to achieve those things. Does that make sense? So another example that I can use is, I've used this example already. Somebody, a lot of the time, and I use myself as an example again. Things such as materialistic possessions, Lamborghinis, all of that kind of stuff, it's not something that I'm super excited about. When we do get there and the money does come in such huge quantities, and if I can afford to get those things, absolutely yes. But these are not the things that drive me. In fact, the things that drive me are things such as family, quality time with my family, the ability to travel, to do what I want, when I want, the ability to have family time with my parents, and so on and so forth. However, putting myself in a position where somebody else has also done that, it can also become the similar type of illusion. Okay. So this is the whole purpose and the idea of this particular chapter. And what the author is trying to get us to do is understand that it takes a certain level of humility, a certain change of mindset in order for us to probably even just attract that particular type of wealth. Because I'm not saying that by any means that this is what I'm saying. I'm saying if we're jealous or if we're trying to be very envious of the person and the materials that they have, it doesn't often allow us to obtain those things in the first place anyway. So it requires us to change our minds and our attitude towards even the person that holds these possessions. Okay, just drop some number ones in the chat if you guys are still with me and you guys are getting what we're saying right now. All right. Perfect. All right. So let us continue. So there's a few takeaways here. And one of the things that I love about this, especially when we do share the PDF with you, is there's a few lessons that you can actually take away, okay, from the PDF that we're going to be sharing with every single person, right? But the first thing is this: people want the status and not the money. Okay, so most people, what they admire is the person in the luxury car, the person in the luxury items. Again, I've mentioned all of these examples, so I probably won't go through it again. But they admire those possessions and the status that comes with it, the respect that comes with it, not necessarily the money. Okay, so seeing wealth actually makes people think, rah, I wonder how people is going to respect me. It could even be your own family members. I wonder if I do this certain thing, how my mom is going to think of me, how my uncle, my dad, you know, my wife, my husband, my so on and so forth is going to think of me, right? And at the end of the day, it shouldn't necessarily be what kind of respect can I gain out of doing these things. No, this is where I spoke about the mindset needs to basically shift. Okay. But another thing that it does is it creates this cycle that people chase the status and the symbol instead of the financial independence. Okay. I'm going to relate this to trading as well. Okay. You see, especially with social media nowadays, we have many different posts. Somebody, for example, decides to make, or they had such a great day, they make 100,000 in their trading account as a profit, and they share screenshots. And rather than realizing that that's not the true definition of idea of wealth, they see the big wins and the big images and all of these screenshots and stuff. But this is not how you actually build long-term wealth. In fact, they're not thinking about the financial security and the long-term security that actually comes with consistent gains every single day, especially when you're trading on a regular basis. Okay. And another major thing is when it comes to trading is that you might see the big check, the big reward from that particular individual, but you actually don't see the sacrifice that is actually taken them to make such big withdrawals. You don't see the time and the effort and the years that they've actually put into their craft, especially to master such a skill set that we're discussing here, which is trading. Okay. So one question that I want to ask you for your own reflection is this: are you chasing the financial success? Or are you chasing true freedom only simply to impress others? So I'm going to take a pause here just for you guys to think. And in fact, whilst we're on this topic, just share in the comments because we're gonna try to make you guys. We're gonna try and engage with you guys as much as possible. Just share in the comments your thoughts on that. Is it the status? And you can be very transparent as well. Is it the status that you're chasing, or is it true financial gain, financial freedom and stability that you're actually chasing? Let me know in the chat. If you're number one, you're looking for financial stability or you're chasing the freedom. If you're number two, and be very, very, very transparent, just say it. Just say that I'll be very honest. I've been looking at too many screenshots. I've been chasing more of the the gains and the profits because they see other people and they just simply want to prove to their friends and their family that they can take profit 100 and make a lot of money. Just be very honest. So if you're number one, you're on the good side. You're number two, you're chasing the comparison. So let me know in the chat where everyone is at with that. I'll give you guys a minute just to share and let me know with that. So I believe some people have already said chase true freedom. So, but are you chasing the true freedom? So most people have said number one so far. Let's see. Let's see. So far, we have many people saying freedom, which is actually a good thing. But let's see where the majority of people are at. I basically want to see the first person to say, yeah, you know what, I admit. Because at the end of the day, we're doing this TP Masterclass to actually help people. So, the more transparent, the better. I was once there myself. And sometimes we can almost fall into a trap and we need to remind ourselves that we need to become humble, right? So just let me know in the chat where everybody is at in terms of that. So let's see. Sometimes two, some people said I'm really chasing the true financial freedom. The one, sometimes two, most times. So someone said two, most times. It says I used to be that kind of person, but back to myself, I realized that it has no good for my financial status and my future. Absolutely. I'm two. Somebody just said outright, I'm two. Yeah, we can be honest here. This is the whole purpose of the TP Masterclass. Somebody said both. Okay, this is amazing. All right. But here's the second thing that I wanted to share. So the second lesson that I want you guys to take down at the minute is this, that true wealth is actually something that you can't, it's invisible. Just to leave it in simple terms, true wealth is invisible. And what I actually mean by that is this, that rich people, they stay rich because they don't flaunt their wealth. I want to use this example. All right. So somebody you see, they have a car such as a Rolls Royce. I don't know the exact price ranges, but let's just say it costs $100,000, right, to buy a Rolls Royce. It costs $100,000 to buy a Rolls Royce. In your mind, you're probably thinking, wow, this individual's a millionaire. They've got $1 million in the bank to afford this. But it's not necessarily the case. In fact, a lot of their wealth is tied up in major investments that you probably never knew and things that you probably never seen and probably have no idea that even exists, right? Their wealth is probably multiplied beyond what you can probably imagine. All right. And my point in that is this: when it comes to wealth is actually invisible. It's actually hidden behind the good financial decisions, the stewardship, the time and the effort, the skill set that they've actually obtained based on their years' experience of whatever they're doing. It doesn't necessarily always have to be trading, right? However, when you look at the attitude of the individual, oftentimes when you see these individuals, they're very humble, lovely people. Most of the time, not very arrogant, but these individuals have skill sets, sometimes decades and decades of experience in whatever their craft is. And oftentimes the wealth that they have, the money that they have, the Rolls Royce that they bought is nothing, probably nothing compared to the type of money that they have. So they can actually afford it. Okay. So, the materialistic things we talk about that we're referring to here, cars, watches, designer bags, is not the true wealth. In fact, that's not where that's not where they're spending their wealth. These are just things that they probably just managed to purchase along the way. Okay. An example that I wanted to use as a trader is this: somebody who is consistently making withdrawal and manages their risk and reinvests it is wealthier than the individual who can make big withdrawals, big profits in a day, and then eventually ends up blowing their account, in the next couple of days, weeks, or even the next couple of months, simply because they haven't switched their mind. They haven't even fixed their mind. So another question I want you to ponder on and think about is this: what matters more to you? Is it the fact that you want to look rich, or the fact that you're actually chasing to control your time and actually have financial security? That's a question that I want to sink into every single person who's listening right now. Okay, because we've all been there. We'll probably say number two, we want to control our time and have financial security. But the reality is, oftentimes we want to look rich. We want to look like the person on social media that has hit a massive take profit and said, hey guys, look, I've made £1,000 in profit today. It's more than my salary. It's more than so-and-so's salary. All right. So that's the question I want you to think of. And the last lesson I wanted to cover is this: the illusion of financial success. Okay. So many people, they go into debt trying to appear rich instead of actually building true wealth. Okay. What you don't want to do is chase these big wins. I'm guilty of it myself. I don't want to be somebody who's just chasing. A good example would be somebody is in profit, 25 points. I'm just going to give you a numerical figure here. Let's just say you're in profit of, I don't know, $100. But your target, you've set your target to be making money at the level of $400. So it must hit the level of the $400 mark before you exit, right? But you're currently floating in profit of $100, and maybe it goes up to $125, $150, and you're saying no, but it must go to $400 before I withdraw. And then guess what? Eventually it goes back down, back to your break even, or even in drawdown, and you lose the money, or you just don't make any money, and then it gets into a cycle and gets frustrating, and so on and so forth. And when you were supposed to take one trade, you've now taken 6 or 7 trades. And before you know it, your account and all your money has gone. So you do not want to be somebody who's chasing always the big wins. Have a structured plan in place. Have a risk management plan in place, which is a lot of the topics that we're talking about here. All right. And another thing is that real wealth is about financial freedom, not just the higher earnings. Okay. What's an example of financial freedom? I think we've shared this on numerous different examples. Let's just say you have expenses of $2,500. Okay. The ability to make an income to cover all of your expenses plus a penny or a pound or a dollar extra, right? Without worrying about your bills being paid every single month, but you can cover that every single month. $1 extra is a level of financial freedom. Now, for you, you might decide, hey, I want to make more than that. I want to make an extra $1,000 on top of my expenses. Great, right? But people's perception of what financial freedom is basically needs to change. It's not always just chasing the money, but it's having a plan and also understanding what your freedom number actually is. Okay. So just type some number ones in the chat if you guys are still with me. Okay. I know we have a few questions and I'm about to wrap up before we go into the next segment. So I will address maybe 1 or 2 questions. All right. Before we go into the next segment. However, the last few things or a few points that I wanted to share is this, as a question, in fact, even for myself and for every single person tuning in: are you building lasting financial success, or are you just trying to prove something to someone? Okay, that's a question I want you guys to ask yourselves. In fact, what I'll do now is I'm just going to go to the chat just to make sure I've covered. Well, I know we have a lot of comments, and I'm sure we're going to address every single comment, especially because we're streaming live on YouTube, right? However, just ask yourself that question: are you somebody who's actually chasing real financial freedom, or are you somebody that's just trying to compare yourself to other people? Okay, don't be the person who's trying to chase the comparison. In other words, don't be that person, because it does not lead to a great place. Okay. Now, you guys are free to enter the chat. I know we have quite a lot of people tuning in from different places, as well as a lot of questions, right? I know the last person, Virtuso, if I've said that correctly, I'm building lasting wealth and financial success. That's absolutely incredible. If you're so good at psychology, why are you not amongst the profitable traders? Just looking for an honest answer. Okay. I guess the answer to that question is every single individual is on a journey, and that's what I can say. Okay. We all have different levels of experience here, right? And based on different people's level of experience, just a reminder of the purpose of the TP Masterclass. Okay, the idea of profitability doesn't always need to look like a particular type of number. Okay, so I'm not comparing myself to anybody. Okay, however, we are all on the journey. I'm still on the journey. You'll probably laugh at me when I say this, but every single person who's going to share information with you today is also on a journey, whether they've made it in terms of profitability, whether they've made it in terms of finances, numbers, freedom, the ability to be able to travel, and so on and so forth. All right. That's just to address that particular question. So I'm not going to go through every single question, as I mentioned, because we do have a packed schedule and we do have some exciting segments. But one thing that I'll definitely say is, in terms of our takeaways for today, is this. Remember that we are not looking to compare ourselves to other individuals when it comes to materialistic possessions. But also a question to ask yourself is, the things that I'm actually striving for, are they actual true freedom, or are they just materialistic possessions? Okay, that's something that I want to leave you with. Okay, so once again, I'm not going to take too much more of your time, but my name is Willis Oromi. We were covering today the psychology of money, chapter 8. All right. If you do have any further questions, you can leave it in a comment. I'm sure we will take some time to go through the comment as usual. Man in the Car Paradox, and we will be back next week going over chapter 9. Okay, and I'm really excited to go through that with each and every single person. On that note, I'm going to go straight into the next segment. We are going to go straight into the next segment. My name is Willis Oromi. Thank you very much for tuning in, and I'll see you guys very, very soon. Peace out.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game.
Hello, wonderful people out there. It's your boy, your servant, Kema Trades. I'm here today again. You have called upon me, and I'm here to share with you wondrous things. Like the Bible says in Jeremiah chapter 33, verse 3. Call upon me and I'll answer you, I'll come and I'll show you wondrous things, things that you might not understand, things that you knowest not. Very interesting, right? And so I just want to say good morning, good evening, good afternoon to every single person who is in here. If you can hear my voice clearly, just write 1, just as you have always been doing. Just put in 1. I want to see if you can hear me clearly. Just 1, and I'll start my session. 1. I just want to see you type 1. Okay, great. It means everybody can hear me. Awesome. Thank you so much, Nelson. Thank you so much, Michael, Patrick. Thank you, Sean. Thank you, Joseph. Thank you, daughter of the Most High. Fantastic. Thank you, Vetusio. Thank you all once again. Let's get right into the segment. I'm going to share my screen. So in the past 2 weeks, my purpose here has been to sort of help individuals, right? Along the way, one of the things that I can say is that as much as I've seen psychology help a lot of people, I've also realized that there are simple things that when an individual does pertaining to, like actually building a system, right? It also helps you a lot to at least beat down the psychology. There are things that an individual can do that will heighten the psychology that, like comes along with the kind of emotional struggles that people go through. But there are certain things that once you put in place, there's very, very little pressure on you. Even though we understand that there's pressure in the market, there is very, very little pressure that comes along your trading. For instance, let me just ask you this question. Who has a $2,000 account, who places a 0.01 on their chart and then put probably even 100 pip stop loss, and they keep coming back to their chart to watch if that trade has hit stop loss or that trade is going into profit every single minute or every single 5 minutes or like even per hour? You realize that the fact that you have a well of capital, the fact that you are using a risk as low as 0.01 on the market, even gives you that comfortability to do whatever you want. You will just be roaming about everywhere, and then like basically you even forget that you have a trade in there until later on you remind yourself that, hey, I have a trade, let me go check it out. But the same scenario, an individual who has a $2,000 account and has placed 5 lot sizes on their account, you will not feel free. You'll be sweating, like you not even leave your phone. You'll be glued to the chart, like relatively watching every single tick that comes in on the market. And guess what that does? It makes you even make more, like uncertain decisions, more unplanned decisions, right? That is basically why we talk about trading plan. That is why for the past 2 weeks, I've been talking about trading plan and helping individuals out there to be able to create a trading plan for themselves. If you have not watched our previous sessions, go watch the past 2 sessions where I started the thesis on having a trading plan, and you would enjoy it. Not to say too much, let's just go into the slide, and then I would basically show you something interesting that I have on the chart. So first of all, I'm going to talk about gold. Let's go on to the chart. All right. So if you're looking at the chart currently, this is the pair that I trade, guys. This is the gold market. This is the price representation of the value increase or the value decrease of gold. That is basically it. If you trade the forex market, you know that every single tick, every single movement has to do with price of the particular assets that we are trading. And so if I have gold on my chart and you're seeing price go towards the outside, or this particular movement towards the outside, what it basically means is the price of gold has been increasing. So now the next thing that you see is I have what? A year demarcation. I have 2023, somewhere around this region. You can see 2023, you can see 2024, 2025, and you can see 2026 just around this area. I like to demarcate the chart like that so that I give myself a better perspective, macro perspective, monitoring the pair that I trade, knowing what exactly the pair is doing and what it has been doing, in the past month, in the past year, and then all. So if you're looking at my chart, guess what? Gold just hit $3,000. For a lot of people, I know that really doesn't matter to you. Okay, so gold hit $3,000. So basically what? But here is the deal, right? Last year, January, gold was sitting relatively around $2,000, just around this particular area. 2024, gold, the lowest point of gold literally entered the market somewhere around $2,040. And the lowest point that it was able to reach was somewhere around this area that was 1,900 for a very little, meager pullback. This is actually the weekly time frame that you're watching along with me. And guess what? 2024, we had that market rally towards the upside, devoid of all the dollar strength, devoid of whatever the dollar was doing. Gold was still going towards the upside. Why exactly was it going towards the upside? So this is when some of these questions comes in, and then it tends to relatively make you study what exactly you are trading on the market. So what exactly happened? Okay, I realized that gold does not necessarily just move based on the increase in value or decrease in value of the dollar. It also has to do with geopolitical happenstances, geopolitical events like conflicts between Russia and Ukraine can relatively make people now feel like, hey, their investments that are elsewhere is not probably, sound. So they need to reinvest or, shift that portfolio from wherever it is, and then which area to put it than the metal that does not destroy, the metal that is safe, or can be kept safe for millions of, years, or for, so many years. I'll be getting. They come here and we call this a safe haven. People put their investments in here. And guess what? When demand increases, the price also increases along with it. And basically, price has kept on going. In 2024, the highest point that gold was able to reach was $2,790, right? That was in October 2024. And guess what? That is when we had a pullback. When I saw that pullback, I just knew deep in my spirit that this is a pullback for another, rally towards the upside. And that rally could get us to 3,000. So I started telling all my mentees, guess what? Gold is about to shoot to 3,000. And yesterday, we had gold rally all the way and hit 3K. That is great news for all people who are trading gold. But then there are more opportunities that are going to come in the market. Once it has hit a milestone like that, we might be looking at price moving back towards the upside, a pullback, and then all. And then we demand a criteria in order to trade it. And that is why you need to have a trading plan. And so let's just move from here and then go to the next area, trading plan. What exactly is a trading plan? I told you guys the last time. A trading plan is simply your systematic approach to trading your defined edge. It means that before you even have, anything else, have a defined edge on the market. Edge is simply one thing having the possibility of happening over another thing. So if you are talking about edge in profitability, you are basically talking about your profits being able to come more than your losses coming in on the market. It's simple as that. So when we say someone has an edge over the market, it means that person trading that market has a higher potential of having profits more than losses. Or even if they have higher losses in the market, their risk to reward is able to help them for them to be able to stay constantly profitable. And I can tell you for a fact, the past 3 years has been nothing but profit coming to me, along the way, right? And sometimes I share it along with other people. That is what we basically want to do. Make profit from the market, help other people. So now let's go back to the slide. So your approach to a defined edge in the market, and these are three things: entry, exit, and then risk management rules. So you are going to find, they say that if you want a good strategy, this is what it will provide you with. It will provide you with an entry, it will provide you with an exit, and then when I talk about the exit, I'm talking about two main exits. We have the stop loss point, and then we also have your take profit points in the market. Some people know how to set stop loss very well, but they do not know how to take profit on the market. I hope you understand. And then also they say the stop loss is supposed to be where the stop loss is supposed to be. When you put the stop loss where it is not supposed to be, market will come and then take you out. If you think that so I want to put the stop loss here, market can come and show you that where you want to put the stop loss, it's an area that is entirely wrong. There is where you need to put the stop loss, and needs and wants are different things altogether. So let's get in there. Now, in drawing a trading plan, this is your eventual goal, right? You have two main things that I'm going to talk about. A simplified trading plan, that is one. And then two, a flowchart diagram detailing the full end-to-end process of your strategy or of your approach to the market. So first of all, a simplified trading plan, right? Which we talked about last week. How exactly an individual can have a trading plan, certain things that you can put in place, and then all. Today, I'll show you a chart representation of the next part, which is a flow chart diagram detailing the full end-to-end process of your strategy. What is the profits that you want to take? What is the stop loss that you want to take? Have you journaled it? Okay, let's journal it. Okay, how do you draw that particular journal along the way, right? Now, this in the first area, right? When I talk about the first area, a simplified trading plan, let me just give you this. When I come into the market, basically, I want to be able to understand all of these things. And I'm talking about being in your shoes. One, price action. You understand that whatever is happening on the market has to deal with price, because the financial markets are different or set apart only by what is traded on there. So the forex market is different from the stock market just because of what is traded on the forex market being different from what is traded on the stock market. So even though we can trade stocks on the forex market, the understanding is that we are not trading the what and owning the assets like we are in the stocks. We are only trading CFDs, which is called the contract for the difference in the value of the assets that we have chosen to trade. So if you are trading stocks on forex market, you are only trading the contract for the difference in the value, whether price is going upward or price is coming downwards. That is what you are basically trading on the forex market on here. I hope you understand. Now let's move on. So at the end of the day, what you must understand is I want to be able to trade price action. I want to understand what price is doing on the chart. So that is one cue. Write it down. One cue for you to delve into, learn what price action is about. In subsequent areas, we are going to be talking about price action and then all. But for now, at least open the books and study what exactly is Kama talking about when he says price action, right? Then now you have to be well versed in direction. How do I identify the direction of the market? When I swiped my chart onto the gold market, it was very evident that gold was going towards the upside. But that was the weekly time frame. So when I come to daily and 4 hour, how will I be able to identify that today market is going towards the downside or going towards the upside? That is another area of study that an individual needs to understand. Okay, then we come to market structure. If market is moving towards the upside, how is market traveling whilst it is going towards the upside? The analogy is that if a car is moving towards, like in Sawum, right? I'm using it Sawum because it is my area of what, like it's my jurisdiction, right? So if a car is moving from point A to point B, let's just use that, right? At the end of the day, the car doesn't just go all the way straight from point A to point B unless, of course, the road permits it to do so. But if it is a normal route, right, moving from point A to point B, as in one jurisdiction to another, you find that the car goes in several ways. So when we say market structure, we are saying we indeed know that market is going towards the direction in which it is going by what? By its visibility on the chart. But how is it traveling whilst it is going there? That is another question to ask. So now, market structure, and you go into details on the principles of market structure. Once you get into market structure, you realize that, okay, every point in time when market moves towards a particular direction, it has an area to what? Breathe, a pullback area. That pullback area brings you into an area for a better entry. That is why when I was talking about gold, I said, when I saw price move from $2,790 and then came all the way down during, the month of October all the way through to November, I knew for a fact that was a pullback. That was what? Aiming for price to shoot for continuations towards what? A higher price point. And I was anticipating 3,000. So based on that, you say, okay, what are the swing points in there? Where are my swing points? From swing point A to swing point B. So you have to study what exactly swing points are, where the market take off, and where the market end for the what? The major retracement to start. These are your swing points that you have to look out for. There's more to that particular principle as well. Then, after you have identified those major points, now we look at what? Your point of interest. Now, I never pick any trade that has not retraced 50% of the movement that it has gone from swing point A to swing point B. I never trade or look for continuations in that order. So if I'm on the daily, if I'm on the 4 hour, if I'm on the 45-minute time frame, that time frame that I'm seeing price pull back, I'm never going to jump in until I see price give me at least 50% of the retracement. Then now I start looking out for what? For my mode of entry. Now, mode of entry, we have different kinds of entries. Are you doing a risk entry or are you doing a confirmed entry? I hope you get it. So if you are doing a risk entry, then you need to understand the dynamics of a risk entry. What do I need to see before I just jump in that trade? Then we have confirmed entry. What are you looking out for before you jump into that trade, aside it having pulled back 50% of the region? What exactly are you looking out for? When you do that, it means that now you're actually generating a plan for yourself, a criteria for yourself that you look out for before you jump into any trade on the market. And I've been doing this over and over and over again. If you are on my Instagram page, you basically see me sharing most of profits at the end of almost every week. And one of my mantra is at the end of every week, withdraw something from your trading account. At the end of every week, withdraw something. And for the past years, that is basically how I've been taking care of family. I'll be understand. Great. Now we move on from what? Mode of entry. Is it risk or confirmed entry? Then we go to risk exposure. Now, when it comes to risk exposure, there are two main things: per equity and per purpose of the equity, right? So an individual can come into the market with $2,000 and state that I want to trade this account professionally. Now, when we say professionally, what is professionally? Probably the person wants to go low risk, like probably 1% to 3% of the account being risked, and then goes, like gradually along the way like that, growing the account systematically. Another individual comes into the market with the same $2,000 and then says, this $2,000, it is go hard or go home. It's either this $2,000 is burning or I'm fetching $20,000 from the market today. So the purpose of the account also counts. But guess what? We call that flipping. And I have a saying, flipping is not for people who do not have extra money in their bank account. If you do not have an extra amount of money in your bank account, why can't just put $2,000 on the market and then decide that, hey, you know what? I'm going to risk this entire money. Then it looks like you don't have a family to take care of or someone to hold you back, right? But at the end of the day, if you come into the market and then you say, hey, based on my equity, I want to do this right. One of the things that you should do is to sit back and then what? And then calculate your risk exposure that you want to put on each trade, which means how much am I willing to lose on each trade that I pick in the market? And if I am actually taking profits, it means that I have to take 1:1 or more in the market. Then it comes to the criteria of taking profits in the market. Where do I take my profits? How much of profit do I need to take? So even if trade is going from 0.0 to 300 pips, you as a trader knows that you have to relatively have an area or an amount to take out of that 300 pips. You don't take from point A all the way to point B. You take within that particular margin. How do you understand? You take within that particular margin, and then what? You close out your profit. Some of you want to see market keep on going and keep on going, and so at the end of the day, market comes all the way down, takes you out of entry. Sometimes some of you don't even have the sense of dragging your stop losses to the entry point once profit has hit probably 1:1 risk to reward, and so market comes all the way back and then hits. And remember what I said last week: never let a winning trade become a losing trade. This is all part of the trading plan. You write it down, you make sure you imbibe it, let it be intrinsic, let it be found within you. How do you get it? Walk along with it, speak it wherever you find yourself. At the end of the day, let it be a part of you. And then I'm going to just switch from this area where I'm going to talk about the flow chart diagram detailing the full end-to-end process of your strategy. So with that, just follow me on this. And once I'm done with this switch, I'll basically just leave it here. I prepared this specifically for my mentees and for most of the people who wanted to do this particular challenge. So I call it a challenge, right? And because it's a challenge, you need to follow a process. I hope you understand. So that process was drawn for these individuals for them to be able to draw and then follow up on this particular plan. So let's go in there. Now, this is what I call a plan. If I want to move $200 to $100,000 in 100 trades, which myself and my, like mentees, a few of them are actually embarking on this journey as I speak to you, right? Some of them even started from $100, right? And we're actually embarking on this journey. It is not my place to actually communicate it on this live session, but I just wanted to use it as a means to teach you what exactly it is to actually do. Now, before I go in here, there's a story that I told to Clifford about 2 days ago. I told him about how a village wanted water, right? Now, they need to walk about 5 kilometers in order to get water from a stream. And sometimes it is really tiring for them to bring the water all the way back. And sometimes because of the way a lot of people find themselves in the stream area, they end up making the water dirty by stepping in there. If you have been in the village before, you know how people fetch water from this. Or if you have read books like that before, you know how people fetch, like some of these things. And then the village council met and then they said, hey, you know what? We are going to give a contract to 2 men in the village. Now, these 2 men that we are giving a contract to, we just want them to be the ones who supply water in the community. Nobody goes to the stream to step in there and then make unnecessary, fuss in the water. These 2 men are the ones who are going to supply the water. Guess what? The moment they got the plan, 1 man disappeared. Where did he go? Nobody knew. The other man who stayed started work just the next day. He got himself, with a little amount of money that he had, he got himself 2 buckets. And then he started hauling water from the stream all the way to the village, 5 kilometers walk, in and out, so many times at dawn, starting all the way from 3 a.m. and coming, all the way to 6 a.m. He would have supplied every person in the village water, every household. He would have supplied them with water. And guess what? He was charging them $1 for each bucket of water. And so if he's holding a cane, he had this stick and then 1 bucket in front, 1 bucket at the back, hauling the water in and out. It means every water that he brought into a household, he made $1 for this, $1 for that. That's $2, right? For, bringing water into the household. And it was really working well for him. And for the fact that the first man had disappeared, this man was making money because he was now in monopoly, the only person who was providing water for the village. He did it constantly for about 3 months, and he started planning. If I'm going to retire soon, I'm getting tired, and then I'll probably hand this over to my children for them to come and do. It is a family business now. And guess what? After that 3 months, the other man who was given the contract resurfaced. You know what he did? He left the village so that he could go into a greater city and get for himself investors who are willing to come on board to come and finish that project. You know what the investors did? They came with machinery. They took machinery into the stream area, a pump. installed the pump, installed pipes, and installed filtration systems in all of the pipes, all the way about 3 significant areas, so that the water that comes from the stream, before it gets into the pipe that they installed in the middle of the village, so that it will have a close proximity to every one of the household. That particular filtration system makes the water clean. And guess how much he was charging for a bucket? 10 cents. It means that you would have to fetch 10 buckets of water before it will cost you 1 bucket from the other man who was hauling from the village, like in and out. Now, when the man saw that, he doubled the bucket. So now when he goes to the stream, he now picks 4 buckets and then carries all 4 buckets and bring them. But guess what? After a month, he could not compete with the amount of energy that this man brought in. He had literally killed his business simply by planning well and bringing others on board to be able to do the planning well for him. That is basically how we all approach our trading from time to time. There are individuals who come into the trading world, they just deposit their money, and then the next day, boom, they are in there and trading. By 1 week later, they have ended up blowing their trading account, right? I can call my wife so that she can stand here, and then you ask her, like face to face, how long has Kema had the trading account that he has been trading, and how much profit that he has made so far? And you'll be surprised when she tells you, right? It means that it has been working for me for so long that I need to bestow it upon other people. How do you understand? So in here, you relatively see that from first trade is what? Basically 200 to 100K in 100 trades. It's a challenge for 2025 for a few people that have it, right? So from day 1 all the way to day 11, the capital that was sitting at 200, or the equity that was sitting at $200, with a lot size of 0.05 and just 40 pips a day, looking for 40 pips per trade a day. So you can decide that today, 1 trade, or you can decide that today I can get a trade in London session and also get a New York session, right? So 2 trades a day. It means that it's even going to lessen the number of days that you can actually use for this. But this is actually a plan that has been drawn for people to follow. I'm wrapping up very soon. And gradually, once you get to a point where now the capital has what? Relatively increased by the 11th trade, based on the same 0.05, you realize that now we are sitting at $400 by picking 40 pips a day. Now over here, now we what? We just increase from 0.05, because now we have profit, a little bit of profit to back us, right? So we increase profit, the lot size from 0.05, and then just bring it along to what? 0.08. And then we go along like that. Profit margin has been calculated, how much you made. If it is a losing trade, you lose, you go back to the previous lot size that you were supposed to use on the account. It is as simple as that. And once you are making winning streaks, you are basically climbing. If you make a loss, you go back to what? The previous lot size. That is what? Basically for that particular account that you are sitting in currently. And gradually it goes from 0.08 to 0.1. When price, like your equity is now sitting about $560, and then it goes from 0.1 all the way to 0.2. Now, guess what? When you are able to reach $1,000 by the 26th trade, now you guys see the dynamics of the trading. By the 26th trade, if everything goes well and you are winning all the trade, which means you have to have a good system, right? By the 26th trade, you should have been sitting at $1,000. Now that is 1,000 milestone. What do? We withdraw the capital, which is the 200, and it brings us back to what? $800, which means we have to come back to number 22 and then now start using what? 0.01 and following through all the way, right? And as time goes on, the capital keeps on growing, and the lot size also keeps on growing along with the capital, right? But it gets to a part where it's scary. A lot of people, are not comfortable with using lot sizes like 1 lot, 2 lots, 3 lots. But it gets to a point where, we begin to use that area. And my people have understood that by that time, we would have been able to gather profits enough for us to be able to try that. So guess what? When we hit 5K as a profit, we make a 2K withdrawal. We have 3K sitting in the account, which means that we have now come back to number 40 and then start with 0.5 lot size and then go along the way like that, all the way till we hit our next milestone, which is what? A 10K milestone. Then we make a 3K withdrawal. This is a plan. So it means that at every point in time, you know exactly what you are doing. I hope you get it. And it doesn't end there. Right down here, I have what I call a journal. So if you can pop up the, the journal on the screen again. Kindly bring the journal to the screen. Right around this particular area, what you relatively see is great. So right down here, what you see is a follow-up journal. So the follow-up journal is just for you as an individual to be able to what? Follow up with everything that is going on in your head emotionally. When you pick the trade, what actually came in mind? What was going through your mind? What session time was it? Was it London session? Was it New York session? This would actually help you to keep track of the times when you have more losses coming in and the times when you have more profits coming in and the times where it can actually make you seclude yourself and then start trading in a particular session. So there are people who have actually told themselves that from now on I would relatively be trading what? New York session, and it is based on what they have seen in the market. I'll be getting. Basically, this is just a fraction of what I've been going through in order to be to stay very profitable in the market. If you know me, you know that I literally feed my family and do everything with Forex. I earn from the market, and then I relatively feed. If you are in Ghana, my jurisdiction, you don't need too much to be able to live, right? Just this past week, I made 21K profit on the market. I posted it out there, and then literally I was in the room here, with my son sitting on my desk, and we were literally playing. It's beautiful, and everybody must have that kind of feeling, right? And that is why we are here to constantly share some of these things to you all. You can replicate this. You can go back to the video, like scrutinize it and then watch it carefully along the way, and then create one for yourself along the way. It goes all the way down 10K, 50K withdrawal, all the way down to when price gets to the final milestone point, which is 100K. And but frankly speaking, by the time you get to 100K, you would have made about 70K withdrawal already on the market. And guess what? As I said earlier on, my team and I have this plan, and we are actually embarking on this plan this year. That's why there's 2025 written very boldly at the top area here, right? Thank you so much for this wonderful session. I always love that, you guys have me here, from time to time. Even when I'm in town, I literally tell Cliff, no matter what, I'm driving all the way to the house. I want to sit in my studio and then do this session for the people. And I'm glad to always be here. I'm leaving the session to Cliff. If you are in here, peace out, every single one. Love you all.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life. I think big, I dream big, I trade smart.
All right. If you guys can hear me loud and clear, just drop some number ones in the comment section for me, please. How are you guys doing? Happy Saturday. We thank God. You guys are fine, yeah? Again, first of all, let me say a big thank you to Kema Trace. God bless you, brother. I celebrate you. Willis, I celebrate you. God bless you. I really, really appreciate each and every single person that comes on this live stream. It's an amazing time all the time with the TP family. Kema was one thing, he was very right. Every single weekend he tells me, no matter where I am, I will show up for TP family. I will show up for the TP Masterclass, and he has done that over and over again. Before I go into today's segment from my end, today we're going to be learning something very powerful, and one of my prayer points is that people will get this information that we're going to talk about today. And it will do a lot for you. But before we do that, we have a call chart. Let me just say hello to each and every single person, maybe 5 or 6 people, wherever you're tuning in from. TP Masterclass is a global event, even though, we have not met in person before, which we will. I believe that by the grace of God. But let me just say hello. Can we bring some couple of few names and where they are tuning in from, so that we can basically just take it out from there, please? So we have Nelson Williams from South Sudan. Nelson, nice to meet you, brother. Who else do we have out there? We also have Justice from Ghana. Justice, nice to meet you. And Haiti in the house. We also have another South Africa in the house. UK, in the UK, but originally from Cameroon. Nice to meet you. Kenya in the house. Daily Trends, nice to meet you. Aaron from Nigeria. Nice to meet you as well. Listen, guys, I honor and celebrate each and every one of you guys here on the TP Masterclass. I really want you to make sure that you will avoid every distraction that will take this information away from you. Before we go into today's segment, I really want to talk about something very, very, very important, because, Kema was explaining something earlier, and I want to touch on that a little bit because he didn't want us to go in and talk more about it, but he was very right. And I want you guys to really understand this very well before we go into today's session. First of all, there are 2 things I want to establish before I go into today's segment very deeply. In this world, not just in trading, in every single thing you do, one person cannot do it all alone. It doesn't work like that. This has been one of the most biggest traps in this industry. You see, you may have heard me saying this before, or you may have done your own research, and you do understand that the financial market, the hierarchy, we are at the bottom of the hierarchy. And because of that, you and I have a very unfair disadvantage with the tools, the resources, the buying power, your finances. A lot of things are going to put you in a very small scale to succeed. But one of the things also that you will find in this retail trading space, sincerely speaking, is that retail traders are the loudest. You will never, ever, ever, ever find Warren Buffett comparing himself to Ray Dalio, or Ray Dalio comparing himself to George Soros. Yes, they will basically brag around and say, I caught the 2008 market drop, I did this, I did that. But they never say things like that. You know why? Because even them, they know and they understand that no matter how good they think they were yesterday, tomorrow can be a different story. And this is one of the things that retail traders are actually really struggling with. They don't want to understand the fact that you cannot predict the market consistently over and over again. And so at one point, if I am saying that I killed the market yesterday or I killed the market tomorrow, what then is my basis of surviving the next day? And that was what Kema beautifully spoke about, and he spoke about systems and trading plan. Guys, we already established this point, that anything outside your system, anything outside your plan, eventually will expose a certain dimension of you that you don't want. So when you come onto this masterclass, the goal of this masterclass is not to establish any point that anybody in here is best or greater than somebody out there. We don't compare ourselves to anybody out there. The Bible says that those who compare themselves to themselves are not wise. It is very important that you understand this. And you may have heard me say this before, that success is the progressive realization of a wealthy ideal. That means if you say you want to basically just use Forex to buy yourself bread and milk, and you are able to do that consistently in your book and in your life, that is success. Anybody who comes into your life and say, hey, you don't own a Lamborghini and therefore you are not successful, is trying to bully you with materialistic things. Success is not generic. Success is relative. That means if I said I want to use trading to live in Dubai, and I'm able to live in Dubai with trading, that is the definition of my success. The big problem here is that a lot of people are comparing what they are seeing, and that I love what the book segment part as well, is that they compare themselves. You know, Kema says something, again, I'm bringing his point because he says something and I hope you guys got it. He said, I was sitting in my room and I have my baby on my lap and I made 21,000 Ghana cedis, or whatever that it is that he was saying. And I want you guys to understand what that means. That is the definition of his success. So you need to be able to understand, until you establish that reality for yourself, you will never think you are progressing. You will never think that you are growing. Just because Forex has not bought you house yet, does not mean that you are not a profitable trader. Just because Forex has not been able to build you the mansion yet, does not mean that you're not a profitable trader. You need to define what profitability and success means to you. That is number one point I want to establish. Second point is that I saw some couple of few things in the comment before I jumped on. And I think a lot of people do not understand what trading psychology is. Guys, listen. This is not my segment for today. This is just a charge for you guys to be able to understand exactly what we're about to talk about. Trading psychology, when we say psychology is nothing but the study of your mind and your behavior. It's a study. Listen to this. When we say study, it means you picked, for example, if I pick this bottle and I start to study the words, the content, the quantity, I am just studying the structure of this bottle. So if you talk about psychology literally is the study of the human mind and the behavior. So if we say trading psychology, it means it is a study of the trader's mind and his behavior when he is trading. So if I am teaching you trading psychology, I have to teach you the studies I have been able to learn about myself and the people that I've gotten the privilege to study, okay, their mind, combining them together to teach. And you will use that information to study your psychology. So psychology is not whether bad or good. Psychology is a study. However, you can have a bad behavior and a bad attitude. That is not defined as psychology. Psychology is really the study of your mind and your behavior. It is your behavior that can be negative or positive. Are you with me? So when we say trading psychology, and when you come on course like this, and then when everybody is teaching you, for example, if we are reading a book, the book is trying to give you knowledge that will shape your behavior. So the book reading is a tool that helps you so that when you study your behavior, you can now use the tools to help yourself. Are you with me? Very important that you understand this. Okay. Now, what are some of the most common misconceptions that people don't understand? I want to just talk to you for a second. What are some of the most common misconceptions that people don't understand? Number one, I want you to write this down, that psychology is not bad or psychology is not good. Psychology is just a study. So one of the things that I want you to understand is this. Your belief system about the things that you are studying, your belief system about every single thing changes the way you approach it. So A lot of people may not listen to this carefully now, and I speak this out of a very, very real understanding here for you guys to understand the reality of the conversation here. A lot of people may not be able to go in depth with psychology with you, not because they don't want to teach you. And that is why we established TP Masterclass in a way that will be able to help you to understand that a group of people who are mentors and who are building their wealth and their success in a different dimension can come together. For example, Kema has his own community, but yet he come on TP Masterclass not just to assist. He loved this family. He loved TP family. So he does it out of love. So you can see 2 or 3 mentors coming together because we understand one person cannot do it alone. Are you with me? So you need to be able to understand that every single time you come on TP Masterclass, the information that you are receiving, it is helping you to steady your behavior, steady your attitude, steady your mind. Are you with me? So when we talk about things like emotional intelligence, you need to go back and reflect. Am I emotionally intelligent? If the answer is no, why am I not emotionally intelligent? Oh, okay. Then that is why I am always fearing of missing out. Oh, okay. So you are studying. So this is a tool. If we speak about financial thermostat, you are like, oh, my belief system towards money. Oh, now I understand. So you are studying. And the more you study and the more you fix your behavior using psychology, the more better version of yourself that you become. Are you with me? That is the second point that I want to establish. The third thing that I wrote down here that I want to establish before we go to today's session is that when I was coming on to today's life, I was like, God, when does knowledge change someone's life? And I wrote down some couple of few things here that I want to talk about. I'm going to rush into it. 6 points, and I'm going to rush into it quickly. Number 1, anytime that you hear any information, we call something the initial impact. So the initial impact is when something hits you. So for example, maybe you've heard about trading psychology a lot. What is that? For example, myself, why did I get so interested in trading psychology? I got interested in trading psychology, not because I loved psychology back then. No. The reason why I got involved into trying to study my mind initially, ladies and gentlemen, listen to this carefully now. It was because I was suffering from panic attack and anxiety disorders. This was the reason. It wasn't because I wanted to become a better trader. That was not it. I was just sick and tired of why I am always panicking. I was just sick and tired of why I couldn't control anxiety. I didn't know why I was anxious. So I wanted to understand myself. And then my background in science, in medicine, as a science person, gave me more privilege to understand the anatomical structure of the human mind. And then I started pursuing psychology as a study. So combining my reason I wanted to start studying the mind and the behavior, which is because of panic attacks and mental, area of understanding why I was panicking, I now came across a video by an individual that I have so much respect for. His name is Anton Creole. Now, a lot of people don't like him. I don't care whether people like him or not. He just says something that hit me. It made me realize that a lot of retail traders don't understand the kind of business they are in. They don't understand that in this industry, you are one step away from you becoming the liquidity. So I understood that, okay, if that is the case, then it's a mind game. The ability for you to think a certain way by the structure of the market is a mind game. And sometimes I realize that, I would tell myself I would do this and I end up not doing it. So that was what increased and sparked my interest in trying to get more knowledge about who I am in my mindset. So that is the first initial impact when you hear any information. So when you come on this call, the information you are hearing, there will be a spark, but it doesn't end there. The next one is mental reorganization. It's called the shift phase. So you hear an information, then it moves from spark to shift. Then from shift, it goes to deep integration. Deep integration is where knowledge moves from just being knowledge to understanding. Okay. So if let's say I am thirsty and I've heard about water. That is knowledge. If I drink it and it quenches my thirst, that is understanding. So next time when I am thirsty, I know where to go find something to quench the thirst. Are you with me? It's very important that you understand this. Now, the fourth stage, after the spark, the shift, and then the deep integration, the fourth stage is psychological transformation. Now, it is where the information that you are hearing is able to switch up your behavior using the tools of information you have understood about your mind and the mindset in general. It is called the behavioral change. So a lot of people right now, you have heard the information, okay, you have been able to move from the spark, you're like, oh yeah, this is good, to the shifting part, which is, okay, I understand this, I want to change. You have gotten the understanding, but you are not allowing it to change your behavior, because it can only change your behavior when you understand it in the context that you need to be able to allow the information to empower you. Behavioral change. Then the fifth stage of getting knowledge is called the emotional impact. Some of you guys right now, you love TP family. You are now becoming emotionally attached to TP family because of maybe some of a testimony it has given to you. A lot of people will not understand why you are so intrigued about TP family and TP Masterclass. Remember, not everybody thinks that this Masterclass is a big deal, and it's okay. Not everybody thinks this Masterclass is golden, and it is okay. The reason why you think it's an emotional part of your life and you love it so much is probably because you have been on episode 1, episode 2, episode 3. You have felt the beginning of this masterclass. So now the information is doing something to your behavior, and now you are becoming self-aware about yourself. Now you can even pick some of the information we are sharing and you can teach others. You are becoming emotionally impactful to this information. And the last part of any knowledge is called long-term effects, the permanent change and growth. And this last part is where a lot of people normally don't get. Because when something becomes so convictional to you, nothing can change it. So while you are coming in, week out, every single season, listening to this information, whether from the book segment, whether from the Edge, from Kema segment, it doesn't matter. As long as you are listening, and there is a context of truth in it by the grace of God, and you are subscribing and it's changing you, eventually it will become a long-lasting impact. So if this is your first time, don't expect the information to change you. No. If this is your first time that you are hearing anything that we are saying, it's going to be a sparking moment. When you go, it will now shift the more you are thinking. Then it moves from knowledge to understanding, then your behavior, then emotions, then long-lasting effects. If you understand what I'm saying right now, just drop some number ones in the chat before we go into today's segment. I promise, I always say this, but I want you guys to flow with me. You already know we have a culture. Your life, truly, by the grace of God, if you truly understand the information we're about to share today, truly, your trading life, your actual life, you have heard me say this before, that your trading life and your actual life, they mirror each other. They mirror each other. If you fix your actual life, it will fix your trading life. And if your trading life is on point and truly is on point, it will reflect in your actual life. The way you talk, the way you think, every single thing will change. Ladies and gentlemen, listen, today's topic your life, put it in the comment section right now, that my life will not remain the same again after this segment. Transformation is coming to you. Today's topic, as I promised, something very powerful, and a lot of people don't talk about this, and it's not because they don't want to, but because it takes years of lessons to understand what I'm about to teach you in this few minutes or an hour or so. Today's title is called Cognitive Biases. Cognitive Biases. Cognitive Biases. That is today's masterclass. It's called Cognitive Biases. Please, if you are ready, put I am ready. I am ready. I am ready. Are you with me? If you are ready, put I am ready. Let's rock and roll. Let's rock and roll. Let's rock and roll. Okay. I'm going to share my screen. And before we talk about this, I want you guys to see my screen carefully now. I want you guys to see my screen. I will come back again, but let's see my screen. I want you guys to see my screen and see something. Okay, I want you guys to tell me what you see. Everyone, just forget about the comment. Just tell me, feel free. Remember, you are studying your mind. So allow your mind to be studied by yourself. I'm just helping you. So whatever you see right now on the screen, tell me, put it in the comment. Tell me. Whatever comment that people come up with, let me know. Just put in a comment. Put in a comment. What do you see on the screen? Tell me. Virtuoso sells squabbles. When I saw the squabbles, I was like, what is virtuoso? I hope you're pronouncing it. He says squabbles. I was just laughing. Okay, zigzag figure. I'm seeing nonsense drawing. I hope you're not saying I'm seeing you drawing something nonsense. I'm seeing nonsense drawing. Okay, good. No problem. Listen, guys. Listen to me carefully now. I'm teaching now. Listen to me. You see, we call something fractals in nature. Okay, we call something fractals. Fractals in nature. We call something fractals in nature. How many of you guys have a friend? Yeah, can we remove the screen sharing a bit and we'll bring it back again? Okay, can we remove it and then bring it back again? I want to talk to everybody for a second. Do you have a friend, and this friend will tell you something that I want you to look into the clouds. There is a dog shape. All right, I want you to look into the clouds. There is a dog shape. And you look and you don't see this dog shape. And you're like, I don't see it. But like, look, it's right there. And then maybe when they keep on showing you, eventually go like, oh yeah, I can see it. How many of you have seen or heard something like that before? Like something like that. Yes. Okay, Chinerem said, okay, yeah, cool, good. Now, can we bring back the screen sharing? I want to talk to somebody for a second. Listen to this carefully now. We call something fractals in nature. What that simply means is that the ability for you to see shapes in an unusual object, like a tree, the clouds, so on and so forth. Are you with me? Now, it's not every single person's mind can see fractals in nature. It doesn't work like that. It's not every single person's mind can see fractals in nature. So I want you guys to see this carefully now. Do you guys see the number 2 here? Do you guys see the number 2 here? If you see number 2, as I just did this over here, drop some number 1s in the chat. Do you see the number 2 over there? Do you see number 2? Does anybody see number 2? If you see number 2, drop number 1s in the chat. Do you see number 2? Number 2? Okay, perfect. So now you see 2. Now that I've shown you 2, you will never unsee it again. Are you with me? Now that you have seen number 2, your eye cannot unsee it again. Do you know why? Because you don't see with your eyes. You see through your eyes. Your actual eyesight is your mind. You only see through your eyes. You don't see with your eyes. You see through it. Your actual eyesight is your mind. That is why sometimes when you watch movies, some people will be like, no, I'm blind, but I can see. What does that mean? What do you mean that you are blind, but you can see? And when you watch these movies, these action movies, that person may be blind, but he will still beat the other character, right? He can still see. So you see with your mind and you see through your eyes. So now that you have seen the number 2, you can't unsee it. Now, do you guys see a triangle here? It may not be accurate, it may not be nice, but you see a form of a triangle here. Do you see anything of that sort? If you also see that, drop some number 1s in the chat. Now listen to me, guys. Sometimes when people come to me and they tell me, Cliff, what time frame should I trade on? And I tell them I don't know. They tell me, you don't want to talk about the chart. I said, I don't know, because I don't know the way your cognitive works. I don't know the way you process and interpret information. Listen. This is how sometimes smaller time frame looks like for people. This is it. So when you come to me and you tell me, Cliff, what time frame should I trade on? I don't know, because those people who can sometimes trade on a smaller time frame, they like video games. They like video games. You cannot be able to tell every single person to trade on a smaller time frame, because time frame analysis is dependent on your personality and the ratio factor of the analysis pattern. For example, somebody can pick, I know people who will pick monthly, weekly, and daily to make a decision. Some people will pick daily, 4 hours, 1 hour to make a decision. Some people will pick 4 hours, 15 minutes, and 1 minute or 5 minutes to make a decision. It all depends on the way you interpret patterns and decisions. So if somebody asks me, Cliff, why is it that when I go on a smaller time frame, I don't see it, but when my mentor is teaching me, I can see it? Because during the time your mentor is teaching, you are not understanding it by yourself. You are just seeing it through his eyesight. So when he shows you, here is where the break is, and this is the retest on a smaller time frame, and you wait for a change of character and wait for a pullback and the fair value gap, you're like, But then when it now goes back into real time, your cognitive can't see it. The information you guys are about to learn today, your life will not remain the same again. Listen, what did I say about psychology? Psychology is the study of your mind and your behavior. So when you come on this call, it is not about my life. It's not about Kema's life. It's about what you will use the information to do for you. Do you get me? It's very important that you understand this. So a lot of people, everybody is different. Let's remove the stream from the screen again. Let's bring it back again. Let's bring it back again. Let's bring it again. No, remove the thing from the screen and bring me forward. I want to talk to somebody for a second. Listen, guys. Listen. I respect. Do you know how many people who are, sorry for me to say this, 60-year-old, sometimes 65 years, they come on a call with me and I talk to them. There were some couples. They were from a couple. They are married. They are elderly, like 55 and 60 years thereabout. They came on a call with me one time. And they're like, Cliff, I don't know why, we are not making money in trading. And, they were so sad. And they were so sad, really sad, because they have been trading for years and they were worried that trading is never going to work for them. And I said, okay, maybe we should fine tune your strategy. And then they said, okay, I started asking them questions because we wanted to see if we should change their strategy and so on and so forth. And then at some point, something hit me and I said, wait. I asked them a question. And I said, when you take 10 trades, how many wins and how many losses? They said a lot of losses. And I said, okay. And I said, how many of them goes to at least 15 pips, then reverses and hits your stop loss? Now, this is when I knew they were telling the truth. When I asked that question, that how many times does the trade goes to 15 pips and come back and hit your stop loss, they all answered me together. They say a lot. I started laughing and I said, Mommy, Daddy, listen. You guys are desiring a long-term move, but your brain is seeing a short-term move. So even when it goes into 15 pips, and you are in profit, you are not still fulfilled because you want to catch 100 pips. And this may come from an angle where their mentor probably could catch 100 pips. So they were also thinking, if I don't catch 100 pips, I am not profitable. The moment I told them, why don't you adjust the risk of your loss sizes, adjust your stop losses, and then try to target the pips which you can catch consistently on a winning ratio way, and come and tell me what happens. As I'm talking to you today, these couple are now highly enjoying their trading game. Listen, guys, some of you guys, your problem can be as simple as stop trading with your mobile phone and trade with just a laptop. Cliff, what do you mean? You are over trading because you always have access to your phone. So when we talk about trading psychology and I talk about over trading as an emotions, don't think, okay, Cliff, how do I stop emotional trading and over trading? Stop trading on your phone. Only trade on your laptop. So if you're not in your trading room, don't trigger the trades. As that simple? Yes, that is that simple. It's like Christians that if you pray with them, they don't fall. or they don't, manifest in a very weird way, they think there was no power. No, that is not what manifestation of power is. You may not fall, but something has come upon you. Same thing in trading psychology. As simple as me telling you, just breathe in and breathe out before you trade, it will not work for everybody because that person's problem may not be that. Are you with me? So you need to be able to understand that the information you're about to learn here today about cognitive biases is so that you will understand why you are making the decisions you are making. What is cognitive biases? What is cognitive biases? Now, please make sure you're taking note. I am teaching now. What is cognitive biases? Can we please bring the screen back again? I want to start writing because people like it when I write. So I'm going to write. What is cognitive biases? In order for you to be able to understand cognitive biases, you need to be able to understand what your cognitive is. Your cognitive is the ability for you to reason, okay? The way you remember things, basically the functioning of your brain, the way it works. So we are all different. For example, me, one of my stories, and I've not shared a lot on this, master classes. I've dropped out of school before. I have dropped out of school before. I'm not a fan of a school person. I dropped out of schools. When I talk about in psychology, don't ever think that Cliff was a lover of school. I wasn't. If sometimes the people that knew me growing up, if you tell them today I do the things I do, they will tell you are lying. I didn't like school. I dropped out of school for 5 years, and before I went back to school again. And that was because every single time I'm in the classroom, I knew this was not for me. I knew that my concentration span was very low. Small time, I'm bored of the class. Because of my cognitive, I think differently. And one of the things that I realized was that I needed understanding in that area. So cognitive is basically your mental ability to reason, think, interpret, and judge things, and so on and so forth. Now, when we talk about cognitive biases, they are systematic errors. So it's like let me explain this to you. There is a beautiful explanation in the book Secret of the Millionaire Mind. And it was about how, let's say, for example, you are printing something from the computer. Let's say you want to print this circle from a computer. If this is a mistake, and you don't like this to be on the paper, you cannot print the mistake out and try to correct it outside the computer. You go back inside the computer and then fix the mistake and print the paper out. Are you with me? Okay. So when we talk about cognitive biases, they are systematic errors in your thinking. Okay? They are systematic errors in your thinking. And that systematic errors, do you know what they affect? They affect your decisions and they affect your judgments. So that error that is affecting your decisions and your judgments, they let you make mistake. Are you with me? Are you guys with me? If you guys can hear me loud and clear, just drop some number ones in the chat. Can you guys hear me loud and clear? If you guys can hear me loud and clear, drop some number ones in the chat. Okay, perfect. So that cognitive biases that you have is the reason why 100% winning ratio strategy doesn't exist. Are you with me? Because of your cognitive biases, it's why 100% winning ratio doesn't exist. 100% winning ratio does not exist, not because it is difficult to create one. In fact, we don't even care about that. But it doesn't exist because it comes into the hands of a human being. That is why you can buy a brand new car. And unfortunately, that car can have an accident by an individual, not because the car is bad, but because the car is in the hands of a human being. And as a human being, because of the systematic errors in your thinking and your judgment, which leads to poor decision making, can let you have an accident with a car. Are you with me? So that is how you need to understand cognitive biases. So why does these errors happen in the first place? These errors happens in the first place because your brain loves to save energy. Let's say, for example, every single time that you are doing something in your trading career or whatever or not, let's say you wake up at 5 a.m. and every single time when you wake up in the morning, you try to, write down in your journal, write down in your book about who you are. If you do that consistently for at least a minimum of 21 days, your brain will capture that experience and save it as a habit, okay? And then so that it doesn't have to use energy anymore to think for you to do that. So it becomes an unconscious competence behavior. So now you do that consistently without even being aware of it. That is the way your brain is. Your brain loves shortcuts. It loves the idea of, okay, TP Masterclass is going to start every single so and so time, and every single time it starts, this is da. So when you now keep on telling yourself those information, your brain will now create a shortcut. So those shortcuts is what leads to error. It is very important that you understand this. Now, why do cognitive biases happen? There are 3 reasons why cognitive biases happen to individuals, or in other words, why your brain or your thinking pattern start to experience errors. Number 1 is information overload. Number 1 is information overload. Information overload. Now, what do I mean by information overload? You see, the reality of the situation is, unfortunately, I'm sorry, every single mentor or majority of every single mentor in this space, and that was one of the reasons why I didn't want to teach everything, because I knew that I'm not the only one who has a strategy, and I'm not the only one who can talk about technical analysis. In fact, technical analysis is like driving, okay? Everyone can teach it. But the reality of the situation is that not everyone can follow their trading plan, as Kema was saying. So I didn't want to teach everything. And when I started teaching, a lot of people were putting pressure on me. Why don't you teach technical? Well, I don't have to teach you everything. You have a mentor. If you don't have a mentor, there are so many mentors out there in this world who can teach you a strategy. If you want me to teach you a strategy, there is a way that I go by that. I cannot teach everyone. So one of the things that I started doing 4 years ago is that every single person who will message me and tell me, Cliff, we want you to mentor us in a body of structure way. I said, okay, but I was now only teaching maximum 20 people per year. You know why? Because I cannot teach everyone on one single call because of examples like fractals in nature. Not everybody will be able to understand smaller time frame. So if I bring 100 people on one call, I am doing damage to a lot of people. Have you ever heard this analogy before? That if you bring a lion into a swimming pool, or if you bring a lion into the sea, that lion cannot beat the fish. But if you bring the fish on the land, that lion will murder the fish. So the environment matters. So because of that, I don't have a culture whereby I teach strategy as in, technical analysis to every single person in one go, because some people will not understand. It is the truth. So one of the things is information overload. Maybe myself and other mentors, whatever, we are all saying the same thing. It's just like different language. Maybe I can say things like Je m'appelle Clifford. My name is Clifford. So Je m'appelle Clifford is French. My name is Clifford is English. Меня зовут Clifford is you trying to now speak in Russian or Ukrainian, but it's the same thing. I'm just trying to basically tell you that my name is Clifford. But then Je m'appelle Clifford. My name is Clifford. Меня зовут Clifford. Same thing. Nothing has changed. But then I want to build a brand around speaking Russian. So I will let you feel like if you listen to what I'm teaching you, it is the best. And the Je m'appelle guy will tell you if you listen to me, I'm the best. And the English guy will tell you I'm the best. So the mentee now becomes a victim of information overload. So now you know about imbalances, and somebody is telling you about FEG. The other person told you break and reach test, and the other one told you it's called mitigation, and the other one came and said liquidity, and the other one says stop hands. So everybody is just saying something else, and the question now becomes, what do I listen to? Indicators is bad, indicators is good, indicators is not good, pure price action is great, but small money concept is the best. Man, ICT, blah, blah, blah. And then you are just confused. So now one person can look at a structure and he's seeing double bottom, but he's also seeing a little bit of Elliott wave. And he's like, you know what? Let me just go and bring out the Fibonacci retracement. Listen, guys, bringing so many different strategies together is not called confluence. No. If you want to have a hypothesis is you understanding if X, Y, Z happens, I will do X, Y, Z. A lot of people are suffering in their cognitive because of information overload. The second reason why a lot of people are struggling in terms of cognitive biases is because of emotional influence. Your feelings are attached to your decision making. And then the third one is mental shortcuts. Now, listen, ladies and gentlemen, we are now about to go into the deep part of cognitive biases. I wanted to establish this point. And before we go in, I want you to understand this. Your brain that you have right now is everything opposite to who a trader is meant to be. I'm sorry. You have been trained for a very long time to become the liquidity, the way you buy things, the way you spend, the way you feel, the things you like. None of them is because of you. It's the things you've seen, the things you've heard, the things you've watched. Your mindset is what makes you decide on the things you want to do. So you need to be able to understand that how do you use this information called cognitive biases to study who you are. I'm going to be giving a couple of few cognitive biases that will let you understand your cognitive biases. And at the end of the day, I will talk about one of the most major one that even me, it was a problem for me. Are you with me? We have many cognitive biases, but I will talk about one today. But before we talk about that one, I want to talk about a couple of few. The first cognitive bias I want to talk about is called confirmation bias. Confirmation bias is a type of cognitive bias. In fact, over here, I didn't finish giving you guys the points here. Did I give you? I said information overload, and I said what? And I said emotional influence, and then mental shortcut. Please write it down. Let's wrap it up because I want to just go to the next one. So information overload, mental shortcuts, and then emotional influence. Please write it down. Information overload, emotional influence, and mental shortcut. Now let's talk about the key cognitive biases you must understand. Remember, guys, we are now shifting from just foundation to you understanding. The first one I want to talk about is what we call the confirmation bias. Confirmation bias is simple, okay? Very simple type of cognitive bias. It is a type of bias that you come to me and you tell me, Cliff, do you think gold will buy? And I'm like, I don't know. I don't know if gold will buy or not because I've not checked the market. And you start telling me, why don't you look at the support? Look, it looks like it has broken this resistance. In fact, it's at a discount area. Okay. And after the discount, I can see equilibrium in this area. You are just basically trying to tell me the things that will let me see what you want to see so that I can confirm what you are thinking. It's called confirmation bias. It is the same behavior whereby somebody will come on this live stream and that person will say things like, I think this guy that he is talking, he's not even a profitable trader. Don't you think? And the guy you are telling will be like, no, I don't think so, man. This guy is just doing his thing. And you'll be like, oh, man, I don't believe it. Look at his cap. There is no way he has money. But the other guy is not seeing it. You are trying to look for a way for you to be able to confirm what you are thinking with that person so that you will feel right. It doesn't mean that you are right. It's just called confirmation bias. Remember, what is a cognitive bias? It is the systematic error in the way you think that leads to this poor decision making and poor judgment. So even though you are connected to the bias you have, it doesn't mean you are right. And normally, sometimes people think that they need to get hooked on a bias because number one, it's either they are already in a drawdown. So when they are in a drawdown, they don't want to see anything else other than what can give them the possibility of this trade going into that direction. Okay, can we remove, are you guys with me? So number one, just remove it and let me talk to everybody for a second. So number one thing that you need to basically understand is this, is that let's say you are in a drawdown. That is when these biases normally kicks in. Let's say you are in a drawdown and the drawdown that you are in, you don't want to lose the trade. You know you have to cut this trade. You know that you have to cut it. But then you know you have a trading friend, a trading mentor. His name is Kema. His name is Cliff. His name is whoever. And you go to him and you be like, Hey, bro, how you doing? I think gold will buy today, yeah? And it's like, gold? I don't think so. Even it's consolidating. Are you sure? Gold can buy today, bro. And he's like, I don't see it, bro. I don't think so. But man, look at it. Just, yesterday I even heard somebody saying that gold will go to 2,500 and push all the way to 3K. Yeah, I don't see it. You are trying to force this person to confirm a bias that may not be real. But as long as he confirms with what you feel, and it feels like it's true, you think it's true. And that can let you stay in a trade you are meant to get out 4 hours ago. Confirmation bias. Because you are trying to confirm what you already believe is leading to poor decision making and poor judgment. That is number one, confirmation bias. The second bias, can we bring it up on the screen? So the first one, let me write it down now. The first one is called confirmation bias. It is very important that you understand this. Confirmation bias. Are you with me? The second one is what I call the anchoring bias. Anchoring bias is when you rely heavily on an idea from yesterday. So this is what happens. You are in a trade. Okay, I'm going to give an example here. Let's say you are in a trade. You said you're going to take this trade. Okay, you said that you took the entry from an accumulative space. Okay, the market has finished accumulating. You saw this whole huge move breaking this. So in your mind, every single time that it breaks this, you know that you will basically just come back again and then just wait for it to come back. Because let's say the market open here, all right, and then when it opened here, you are waiting for it to come back down here again, and then you want to catch it all the way up if you trade break and retest, whatever it is. Or let's say, for example, if you're going to use a smaller time frame to check the change of character and then let it break off that structure and come back again, and then when you're going, you go with it. Let's say it doesn't matter. So it creates the higher high and then a higher low, so you want to catch it from there. No problem. Now, that is the idea you have. Now, anything can change the market again. Now, I believe if the market finds the right structure move, it goes there. However, the fact that that is what you are thinking does not necessarily mean that that is what should happen. No, in the market, it's not about what should happen. It's about what is happening. So don't be too anchored about your bias that if it doesn't happen, you refuse to change your mind. So the anchoring bias can also lead to confirmation bias because you are too anchored about your own bias. If this is everything that you are learning, if this is you, be writing it down. Don't go like, what is it? Just write it down. Confirmation bias is me. So that when I'm giving the information on how to survive in an area like that, you're like, okay, so I'm going to do X, Y, Z. Are you with me? So the number two is what we call the anchoring bias. The second one, or the third one, is what I call the recency bias. Recency bias. So recency bias is when you become so much in tune with an event that has happened. In tune with so much event that has happened. So you're like, oh man, even though, let me just explain this to you. Let's say, for example, NFP happens, okay? When there is an NFP, something happens. This is what I want you guys to listen to me carefully now. Economic news or economic indicators, they are like somebody going to the hospital. And when this person went to the hospital, they told this individual that unfortunately you have cancer. Now, that news is going to break the person down, but that news is not going to kill the person that day, but it could break them down emotionally. Their volatility will change, but that person is not going to die that day, right? In fact, chances are excellent that that person can become well ahead of time also as well. The person may not even die, but then people think what happened that day changes everything in the market. It's not true. That is why we keep on saying volatility, volatility. News brings volatility into the market. However, the structure of the market is always respected. So recency bias is what an event that happened now makes you forget about long-term structure. So you realize that you know gold is going to 3K, but something happened maybe yesterday or Thursday, and it made you forget the long-term structure of where the market is going, and then you became so complacent in that space because your brain is not focusing on that edge. So that is called recency bias. Now, the fourth one is called overconfidence. Overconfidence bias. Overconfidence bias normally comes from when the individual is winning 2 or 3 times in a row, 4 times in a row, and they now start calling themselves the new age Warren Buffett. You know, man, I'm the GOAT. No worries. So every single time you feel like you're the GOAT, what is going to happen next is that the market is going to teach you a lesson, because the market is looking for each and every one of these confirmation biases. The market is looking for confirmation bias people. The market is looking for anchoring bias people. The market is looking for somebody who is going to target an event. The market is looking for the overconfident guy, because the overconfident guy is eventually going to over leverage, and he's going to lose the profit he made on London session. And he's gonna try to go in again during New York session, even though he knows he have to stay away. He's gonna get in, and then he's gonna risk more because his brain is telling him your strategy is good. The mentor that gave you this strategy is a GOAT, and therefore you are the GOAT child. That is not how it works. Are you with me? So overconfidence bias is the fourth one. Now the fifth one is called the hindsight bias. Is that you believe that events is predictable after they have happened. No, that is not how it happens. Remember, in trading, it's a probability game. Are you with me? Trading is a game of probabilities. If you are going to take 10 trades in a row, you need to understand that you may have 2 losses or 8 wins. Whatever. You don't know when these losses are going to come. So you need to understand that trading is a probability game. It's a game that you need to understand that you don't have to be attached to the losses. Does that make sense? It is very important. Now, I'm not going to go into much in depth of today's specific information, which is all the ones that we have mentioned, but I'm going to pick up one major type of cognitive bias. One major type. I hope we are learning. One major type of cognitive bias that affect retail traders over and over again. One major part of the cognitive biases that affect retail traders every single day. I'm going to write this in capital letters. It's called the loss aversion. Please write this down. Loss aversion was my problem. Loss aversion it has been one of the biggest problem in this retail trading space for a lot of people when it comes to cognitive biases. A lot of people. And today we are going to pick that one first. And maybe in the future, we'll talk about other type of cognitive biases, okay? Today, we're going to be talking about loss aversion. You may have heard me say this before, that loss aversion is basically a psychological tendency. It is where your desire that I don't want to lose becomes so much greater than your desire to gain. That means that the pain of losing is felt more intensely than the pleasure of winning. That you look at a losing trade, that you know you have to cut it, but you will stay in, and if somebody asks you, you would tell them it's because I know it will pull back. You are lying. It's that you don't want to take the loss. So you have now forgotten that you are the guy that can cut off this loss and come back again and make good money because your RRR is great. So you're going to make money anyways. But the reason why you don't want to cut that loss is because your tendency or the pain of losing is felt more intensely than the pleasure of winning. Now, I want you guys to listen to this carefully now. This study is very sad and powerful, that 2.5 times of the pain that you feel is more powerful than the equivalent of gains of pleasure you will feel. That means if you pick up an individual, the pain of them losing is much more important to them than the pleasure of winning. So you can pick up a guy and you can pick up a girl, and this guy knows he's no more in love with this lady anymore. But because this guy does not want to see this lady with another guy, he will rather lie, cheat in secret, and keep this lady so that this lady will not go and be with somebody else anymore. Are you with me? Same thing, vice versa, with a girl and also a guy. So a human being will say, hey, I love you so much. They are lying. They just don't want to lose you to somebody else. Not that they want to keep you. It's not true. The fear of loss, loss aversion, the tendency, the pain of not wanting to lose has become greater than the desire of equivalent gains. So that simply means if a trader is winning 500, when they win 500, they feel good. But then when they lose 500, that emotional impact is much more stronger. Are you with me? I'm going to repeat what I just said again. If you make 500, yeah, good, you make the 500. But when you lose 500, that pain of the loss is much more bigger than the gain you got. But remember, in trading, we are trying to balance emotions here. Remember emotions, basic emotions, and complex emotions in our previous masterclass, that you are trying to understand how you can become emotionally intelligent. And so you are going to experience losses, whether you like it or not. And you have heard me say this before, that a stop loss is a stopped trade. If you stop a loss, you've not lost the trade, you've stopped the loss. And if you make any money in the industry, you have not become profitable. You just added an equivalent to your account. Both of them, you need to balance the emotion. So a bad trade is not a trade that you lost. And a good trade is not a trade that you won. A bad trade is a trade you didn't plan. And a good trade is a trade that you plan. So even if you lost a planning trade, it's a good trade. You won an unplanned trade, it's a bad trade. You need to be able to understand this. So now, what does loss aversion lead to? Number one, it makes you avoid small losses at all costs, even if they are part of a sound strategy. So what that simply means is this, is that the individual knows that this is where they took their entry. They took the buy. Okay, the individual took the buy here. Here, you took the buy. Now the trade is pulling back, and your stop loss is below here. Now your brain is quickly going to start thinking, man, what if it hit my stop loss and it goes back? And you are right. It has probably happened to you before. That is why it's called the mental shortcut. It knows that it has hit your stop loss before and it has gone to the direction. So it's reminding you, what if it hit it and it goes there again? And it could. You see, in trading, all these things that you feel, you are right. It could hit your stop loss and go there again. It could hit also your stop loss and go more down. But whatever that you are thinking, you are right. And that is why your trading plan and the strategy and the system is important you follow it. Because everything you are thinking, you are right. You are not stupid. It has kicked you out before. In fact, multiple times. And it went to the direction. So you are right wanting to remove the stop loss to go to the direction. And listen to this carefully now. Also, it is possible you have removed your stop loss and it has also gone to your right direction before. So your brain has created a habit of, oh man, what if it hits my stop loss and it goes to my direction? Therefore, let me remove it. So now what do? You remove it. You remove the stop loss. Now you have no stop loss. What happens? The market keeps on dipping. The market keeps on dipping. The market keeps on dipping. Now you are thinking, should I just bring the stop loss? The market keep on dipping. Okay, then now it goes up here. Now that it's going back up, in your mind, oh my God, I knew it will go to my direction. Now you have forgotten that you are the same person that you have also understood stop hunt. You are the same person that you also understand liquidity grab. You are the same person that you also know the market can fake out and go to a different direction. But because you are already in a loss aversion space, this cognitive bias now is going to turn into anchoring bias. You are going to be too anchored in your bias that instead of you cutting the loss, you are going to convince yourself that this is what? A move that is just going all the way up here again. You have forgotten it has changed a character. Maybe probably on a smaller time frame. So what is happening right now is that your brain is convincing you, oh, it's gonna go there. Then when it now starts coming back down again, you are still forgetting. Something is telling you this market is not gonna go to your direction. Get out. Then because you don't want to get out, now you pick up the phone and you call Kema. Bro, I think gold is going to buy, isn't it? Kema is like, no, I think it's gonna sell now a little bit. I see it selling. And you're like, but don't you see? Look at the 4-hour time frame. Meanwhile, you didn't look at the 4-hour time frame, but now you are looking for everything to just convince yourself it will go to your direction. So you see how it started from loss aversion, then it went into anchor bias, then it now went into confirmation bias, then eventually is going to now lead to a gambler's fallacy type of bias. But we'll get there. Are you guys learning? It is very important that you understand what is happening to you. Remember emotional intelligence? Emotional intelligence is the study of your emotions and becoming self-aware of the way you behave. So now you will know, oh man, loss aversion is happening to me. Cut it. So the moment, Cliff, how do I know loss aversion is happening to me? You told yourself London session, 50 pips, stop loss. You have now reached 50 pips. You are moving your stop loss, loss aversion. Instantly is happening. 911, 911. You are about to enter loss aversion. When you enter loss aversion, immediately you're about to go into anchoring bias. Anchoring bias will move to confirmation bias. You will now start calling people or hopping on from different Telegram channel. The same Telegram channel you convinced yourself you would delete. Now you are looking for it again on Telegram, searching for it. Master of pips. You are searching. You are searching. Master of pips. The gold guru. You want to find somebody to tell you something that will make you sleep at night. Bro, cut the losses. Cut the losses. You have entered into a space the market is about to bully you. Are you with me? Loss aversion. So loss aversion, what will it do? It will make you avoid small losses at all costs, even if they are part of a sound strategy. Like, I'm risking 30 pips. You will now break your own rules. Number two, what will loss aversion do to you? It will let you hold on into losing trades too long, and then now you start realizing that that is a loss. Number three, what would it do? Cutting winners too early. This one also is a big one for loss aversion problem. Loss aversion will also let you cut your wins too early. How many of you guys knew this is my strategy? My risk to reward ratio is 1:3. I need to stay in till the end. But you will cut that loss and it will eventually go to TP3. If this has happened to you over and over again, drop some number ones in the chat. Listen, guys, the reason why I picked up loss aversion as the number one cognitive bias for us to talk about, this was my problem. Ladies and gentlemen, listen, from 2012 to 2015, I never made no withdrawal. Never in my trading account. I will see profits, I will make blues, but I will never withdraw. I will either end up blowing it all, over leveraging it all, using one trade to blow it all, poor risk management, everything, emotions all over the place. Listen, if you don't come to the reality of yourself and say, listen, these are my problems. So somebody will ask me, Cliff, so does it mean your psychology is good? What does that mean? Am I not a human being? You think right now my emotions toward losses have changed? It's not true. Yes, if I lose $500 right now, I don't care. If I lose $1,000, I don't care. But if you think if I'm in a drawdown of 100K, I won't be angry. I will be angry. So emotions is not something that I told you guys this, that we all get emotional, even the big boys. And when I hear people sometimes saying, you know, when will I become a profitable trader? I said, what do you mean? You mean you want to become somebody that will never cry? Guys, I'm telling you, read your history. Read about Stanley Druckenmiller. Read about Ray Dalio. Read about Jim Simmons. Once upon a time, he and his wife was at the beach, and in the Renaissance headquarters, they called him, and then he was losing incredibly some amount of money. He had to rush to the office to go and fix a damage. He was emotional when you listen to his story. So don't let anybody convince you otherwise and tell you there is a dimension of state you will reach. Don't be fooled. Everyone gets emotional. Everyone is part of the game. However, you want to become emotionally intelligent, to be aware when your emotions is about to hijack you and push you into a complex emotional state. That is what you don't want. Are you with me? So loss aversion, big problem. Now, how loss aversion will affect you? Let's talk about that. Let's talk about the psychological reasons behind loss aversion. Let's talk about the psychological reasons behind loss aversion. Let me bring this one here. The psychological reasons behind loss aversion. If you guys are learning, drop some number ones in the chat. Are you learning? Say psychology. If you are learning, say psychology. Once upon a time, so many different things were so complicated in our eyes, and we understood. If you love knowledge, believe me, you will have power in your hands. Reasons behind loss aversion. Reason number one, your human brain is wired to avoid pain. Your human brain is wired to avoid pain. Your human brain is wired to avoid pain. But here is a sad truth. There is a part of your brain, it's called the amygdala. So I'm going to draw a very weird brain of a big head guy. My head is small, I hope. Anytime I say my head is small, my wife is like, what do you mean? There is a bean shape. There is a bean shape at the back of your brain. It's called the amygdala. A bean, when I say bean, beans, but bean is like a small one. That shape or that part of your brain is what is responsible for processing emotions, and it reacts strongly to losses than to gain. So it is that part of your brain that anytime that you see a chicken, you are smiling. But when you see a lion, you are running because your amygdala knows the difference. Are you with me? So every single time that you see a lion, it is that part of your brain that releases the information quickly and say, this is a lion. You are becoming a deer, run. And then your brain will now release sort of waves through the fibers in your body into your leg, and you start to run. So when these waves don't come into your legs, you will not run, you will freeze. So that's why sometimes when you're watching a movie, you shout at people, why are you not running? Why are you not running? That person is frozen. They don't know what to do. Their brain is frozen. So your amygdala is what is responsible for processing emotions, okay? That makes you react to pain differently. So the first reason is because the human brain is wired to avoid pain. Let me write this here. The human brain is wired to avoid pain. The human brain is wired to avoid pain. That is reason number one. It's not your fault. Your brain just don't like pain. That is what it is. Your brain just don't like pain. So every single pain it feels, it wants to avoid it. The second reason is because losses feel more like a failure. So let's say, for example, you are somebody that you are still thinking stop loss means that you are failing. You will not want it. You are not going to like stop losses. So you're going to think every time you hit a stop loss, it means your strategy is not working. It's not true. So it's going to be connected to that. Does that make sense? So that now I'm going to run through this quickly, then we take it out from there. So number one, your human brain is wired to avoid pain. Number two, that losses feel like a failure. Number three is called the endowment effect. It's a psychological ownership of trades. Listen, this is a very powerful one. Every single trader thinks when they enter a position, they are meant to control the position. It's like they have some sense of ownership. Yes, you triggered it from your phone and you triggered it with your money, but that position is not yours. You have to let it go. It's not special as you think. The human need of being controlled also is why psychologically it leads to loss aversion. Then the fourth one is called the sunk cost fallacy. The sunk cost fallacy is when maybe you have invested so much time. Let's say you have waited for this move from Tuesday, and then finally it's moving on Thursday, and you are wrong. Some part of you will tell yourself, man, maybe it's just your emotions. No, cut it. So these are the reasons why the brain is wired in that way. Now, the next thing that I want to talk about is how do you then fix loss aversion in trading? This is the part where I wanted to get to quickly so that we can be able to start wrapping up. How to fix loss aversion in trading. Number one, you have to shift your perception of losses. You need to be able to understand that a stop loss is a stop trade, and no trade that you are taking is special than the last one or the next one or the current one. Every single trade is not that unique. It is just an amount of trades coming together to form a probabilistic structure for you. So number one is you need to shift your perception that losses are not failure. A stop loss is a stop trade. These things are things that you do. Does that make sense? You shift your perception. Then you need to be able to understand that following your trading plan is a mandatory move if you want to become successful. It is the most important thing you need to understand. So shift your perception, follow your trading plan, and so on and so forth. Number two, you need to train your mind to accept small losses. Now, this is one thing that I will say. I have this program called Loss Rewiring 14 Days program, and I will give it to you guys. It's a 14-day mental rewiring program. You're not going to get a full package, of course. But at the end of the day, you will get an idea of it. Every single day is going to tell you what to do. It's going to help you a lot for you to come into the understanding of how to accept losses. So you're going to see it. But basically, you need to train your mind to accept small losses. Number 3, you need to prevent early profit taking. The only way to be able to prevent early profit taking is by doing a strategy I call set and forget. You set your stop loss, you set your take profit, and then you let it ride. If you hit your stop loss, no biggie. You come back again, you look for another move, and then if it is aligning with your hypothesis, you take the trade. If it is not, you let it go until you do that consistently. Or what you can do also as well, if you want to manually manage, maybe bring in stop loss to break even, set an alarm for maybe 30 minutes, 1 hour each. Make sure that the 1 hour is up before you pick up your phone or your laptop to check it and see how it's going. But my recommendation, try to give yourself room to forget about the trades that you're in. If you are consistently always looking at a trade, it means that something is wrong with the emotional state that you are in. Kema says something very interesting. If you have a $2,000 account and you put in a 0.01, you are not going to worry about that trade. Even if it pulls back $100, you know you are only just losing $10. Does that make sense? So you're not going to be worried. So number 3 is prevent early profit taking. And then number 4, remove emotional attachment from the trades. So that means before you trade, mentally accept that the money is already gone. It's a very big mindset shift. Accept that the money is already gone. Before you enter the trade, accept that the money is already gone. And if you are able to accept that the money is already gone, it's going to change a lot for you. Then number 5 is that you need to also, of course, as I said, you need to have a predefined entry and exit rules. Very, very important that you understand this. Now, ladies and gentlemen, listen. This cognitive biases topic is going to take us a long time to be able to get there. But now that you have gotten the idea, now I want to basically talk to you guys for a second. For you guys to understand something that is very dear to my heart, that I want people to understand this. The final part of this information, can we remove, yes, the sharing screen from it? I want to talk to everybody for a second. One of the things that you need to be able to understand is this, is that when we say somebody is a profitable trader, I told you guys, profitable or profitability in trading is not an individual, it's a movement. Listen to this carefully now. Profitability in trading is not an individual, it is a movement. That means you can be profitable this week, you can be profitable this month, you can be profitable this year, you can be not profitable last week, you cannot be profitable 2 weeks ago, you may not be profitable this month. It doesn't mean that you are not a profitable trader, because profitability is not attached to the individual. Profitability is attached to the conditions and the structure of the market, which you cannot do anything about it. For example, if the market, let me ask you a question right now. If the market is consolidating for 2 weeks and is not moving, and your strategy does not permit you to be able to take consolidation trades, does it mean you are not profitable? That is not the case. The market is not just moving, and there is nothing you can do about that. A lot of people have connected profitability to as a human being. So what is happening is, if they are not getting what they wanted from the market a day, 2 or 1 week, they now start categorizing that a situation as I am not profitable, and therefore I need to look for another strategy. Ladies and gentlemen, listen to me carefully now. That is not how trading works. And that is why I told you, read about the story of the old. These guys that you think that they are legends, I'm telling you guys, they were more even emotional than you can ever imagine. The only difference between them now that we are reading about them and them then is that now they have buying power. So whenever they get emotional, it is always affecting the market. But when you get emotional, it's affecting your pocket. So that difference is making you think that something, even your own mentor, no offense, but your mentor may have been able to build some level of success for themselves. Somebody asked me, Cliff, when did you start becoming profitable in trading? When I didn't need trading money. Yes, that is the truth. When I didn't need trading money, I was trading with clarity every single time. How many of you guys have lost your money? Not necessarily because you were a bad trader, but you lost the money because that week you had bills to pay. That week you had the landlord who is about to take the money, or you owe somebody. So you now wanted to basically just make the money quickly. And that rushing moment of your decision led to you losing the money. If you understand what I'm saying, just drop some numbers in the chat. So today I want us to break some nonsense thinking and some strongholds in your mind. Some of you guys are profitable than you think. It's just situations and issues of life. You have bills to pay. You work.
You got family to take care of. That is reality. So even though you have just $100 and you know you are making 5%, you know that you are making 10%, there is no problem with the strategy. There is no problem with your trades. It's just issues of life. You cannot flip that $100 to $1,000 in 2 days. And if you try it, yes, it may work, but you can also lose it with a high chance. So that is the reality. You have issues of life. You have real life problems. You have bills to pay. I want us to come to this reality to understand that while you are studying psychology, also give yourself some break. Understand that yes, trading is a good business, but I am now working. I am now a student. I work from 9 to 5. How do you want to merge that? How do you want to do that? So you will now tell yourself, okay, since I'm trading from Monday to, since I'm working from Monday 8 a.m. to Friday 8 p.m., then maybe I will trade during Asian session. I will only pick 2 times in a week and trade only Asian session. That will now help you to even choose a particular pair or assets. Are you with me? So psychology we are talking about, ladies and gentlemen, is nothing but the study of your mind and your behavior. So if your boss at work is stressing you and it's affecting your behavior, you need to respect the fact that is the reality. If you bring that emotions into trading, your trading life and your actual life, they mirror each other. So if my life is complex, it will affect my trading life. It is very important that you understand this. Are you with me? So when I'm speaking from the bottom of my heart like this, you cannot be able to tell that single mom who has 3 children and somebody who told this mom that trading can help you. And she believed so much that trading can change her life and her children's life. That mom is going to suffer from an emotional roller coaster because every single penny she loses was the penny that could have bought milk for the children, bread for the children. There is nothing I can do about that reality of her life. She needs to understand that if I don't control my emotions, it is as much better that I will preserve this capital than for me to bring it into trading and believe I can flip the 5,000 and turn my children's and my life around. It is better she pause and hold on than to blow the money and feel much more trouble. Guys, trading is serious. Ladies and gentlemen, listen, trading is a serious business. People have committed suicide before because of this business, because they didn't understand the reality of the emotional roller coaster it comes with. So when you come on course like this and you are studying trading psychology, don't study it to the point to know who is best and who is not. Study it to the point of serious business that the hedge funds, the so-called hedge funds and the pension funds and the individuals, you highly lift them up with so much credibility. Majority of them are addicted to drugs. Yes, majority of them are addicted to things that you can never imagine of. They still have psychologists they talk to every single morning before they make decisions. And some of these hedge funds, you can do your research. Before they give you an account to be able to manage a portfolio, they need to bring you to a state of freedom, at least some money, some car, some structures to make sure you are doing well. You are building everything from the scratch. They are managing portfolio because they know how to trade and they gave them money to be okay before they manage a portfolio. Why? Because they know if the hedge fund manager is hungry, their account will be hungry. Ladies and gentlemen, don't beat yourself up. This industry is as simple as ABCD. It's logic. If you are emotionally in your life, you will be emotional in your trades. If you are hungry, you will trade differently. Don't buy into the same notion of people saying, oh, trading is all that I do. Don't only just do trading, because if you only just do trading, what will happen is that your way you are going to behave will not mount up to anything. Yes, I know there are many success stories. Yes, I tell you all the time that I've been trading for more than a decade, but ladies and gentlemen, I've cried. I've cried. There are days I said this and people were laughing. I laid my hands on my losing account. It was XAUUSD gold. I will never forget. That made me stop trading gold for 2 years. I laid my hands on the gold account that I was trading. And I said, God of Abraham, God of Isaac, please don't let my account blow. And it blew. It blew. And that was when in 2015, I told myself, God, I either stop trading or I quit doing something that is making me not to be able to do this. And that was when I made up my mind and I made a decision I would change my trading career. Listen, ladies and gentlemen, yes, you can become a trader, but you are not a trader yet. Make peace with that. Yes, you can mark up the chart and you can see the analysis, but you are not a trader yet. Your mindset, your discipline level, none of them is balanced. You are not a trader yet. Accept that fact quickly so that you can be able to know, okay, if I'm not a trader yet, what should I do to become a trader? Okay, I need a system. I need emotional balance. I need to face my realities. I cannot trade during London session. I cannot trade during New York session. I can only trade during Asian session. If that is the case, I have to sacrifice. When I come back from work and I'm tired, I will just give myself 1 hour and I will go into mindfulness. I will listen to the right mindset books. Then when I bring my mind to a state of understanding, I will now go back to my trading room. You are fixing your mind before you go into Asian session. Now, the Asian session may not move all the time, but you know here and there, you will find maybe some good move. If you don't find it, no problem, but that is your reality. Ladies and gentlemen, don't let anything on social media let you think that trading is complicated. It's not, but it's difficult. It's difficult because of what is required of you. If your life is complex, you are in trouble. If you are busy, you are in trouble. If you don't love trading, but you only want money from trading, you are in trouble. If you don't love meetings like this, you are in trouble. Why? Because these meetings is boring. I know to some people, but if you fall in love with the process, it will change your life. So one thing that I want you to understand is this, that there are mental shortcuts that makes you end up in the wrong judgment and decision making. Why? Because you were a human being. You were not made to be perfect. You were made to be a human being. So your brain will build habits and behaviors that make shortcut decisions. And some of them sometimes is why sometimes you can look at somebody and say, this person is proud. He is not. He's just confident. It's your mindset that is saying that. You are wrong, but you will not believe it. For example, somebody can come on a call like this and the person may have been trading for 5 years. Maybe all the person needs to do is to sit down and listen to the information I'm telling them and it will change their life. But pride will not let them listen to it. So what would he do? He will be saying nonsense. And what would you think will happen? His life will not change. It is very important you understand that, guys. I learned from the hard way. You see me that you are listening to right now, guys, I didn't used to believe in mental transformation. I promise you. There are days I always thought these things are just motivation nonsense until I realized life is principles. When you respect principles, it changes everything. So number one, what do I want you to take from this masterclass today from my segment? Very simple, that you need to understand that your brain is designed to make a decision from a shortcut perspective. Okay? Your brain hates pain of losses. So every single time that you are losing, your brain is going to try to tell you some certain things. So when you go out of this masterclass today, what do I want you to do? Very simple. Every single thing I've said, write down every single thing. I'm going to give you guys a homework. And as many people that will do this homework, I personally myself will basically go through every single thing. I'm going to give you guys a homework today, and I want you to write it down. Write this homework down. From Monday to Friday, do this for me. Everybody, it doesn't matter whether you are in the accountability program or not. This is just for everybody. From Monday to Friday, I want you to do something for me. Every single time you take a trade, I want you to, before you took the trade, how you felt, write it down. Arrange it properly. Be very structured. If you send it anyhow, I will not read it. Arrange it perfectly because you are a trader. You have to be structured. So the way you felt when you took the trade, before you took the trade, when you wake up, how you felt, the time you took it, and where did you take it? Be honest with yourself. Where did you take the trade? What trade did you take? Just write everything down. How you felt after you took the trade. What you felt in the evening. Every emotions that is going to come from your trading, write it all down from Monday to Friday this coming week. And I want you to bring it up on the screen. I want you to, media, can you type and bring it up as a banner? Cheqona@gmail.com. 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 I want you to document every one of that journey from Monday to Friday, how you felt. Cheqona@gmail.com.
gmail.com. How you felt when you took the trade on Monday. How you felt after you took the trade. How you felt hours after you took the trade. Anytime an emotions come into your heart, write it all down. Put the date down, the date, the time, everything, the place you felt it. Write everything. Document everything. Send it to this email. I will personally go over that note I received, God willing, and then I will send you back a psychological feedback. And this is not the first time I'm doing this. I do this, even those in the accountability program, they have already started receiving their psychology self-assessment test results. Write down everything, arrange it well, send it to me. I will personally myself, I will read that email, and then I will send it back to you with an actual analysis of what is happening to you and what you can do to improve. Ladies and gentlemen, this is the introduction of cognitive biases. I wanted to talk about loss aversion immediately because that may be somebody's problem right now that is going to let them blow an account next week. We're going to talk about confirmation bias, and I would think about it because I want to teach a topic. One topic that has been really hitting my heart very well. I don't know, maybe we will pause the episodes of cognitive bias and talk about this lesson upon my heart. Then the following week, maybe we'll talk about the cognitive bias part 2. But at the end of the day, if today's lesson, if it has blessed somebody today, kindly drop some number ones in the chat for me. If somebody is blessed. If you have gotten an email, just let me know. If you guys are blessed and if you guys have gotten the whole entire idea, I know sometimes people have some questions and so on and so forth, but I will not take the questions today now. I go through, when you finish, any question you have, you can go through the history. Just go and drop it under this video. I personally do reply people myself by taking time to answer them. So any question you have, drop it under this section. I will answer you. With that all being said, ladies and gentlemen, I don't want to take too much of our time. I respect our time so much. But then play this masterclass again and again and again to listen to it. Something will click. Remember our structure of knowledge, the shift happens after the spark has happened. And then from the spark, it now turns from understanding. It now turns from knowledge to understanding. Then now you move into the emotional state and so on and so forth. So listen and listen and listen again. And I hope you can be able to grow. With that all being said, I'm going to leave you guys tonight. If you have learned something today, drop in the comment section, your excitement, every single thing that you have learned. And then, guys, don't forget, I see all the testimonies that you guys also share. And I appreciate you guys a lot. Thank you so much, media. Thank you so much, everyone. I will see you guys next week. And also, there is some good news. Hold on, before you guys go. Don't go yet. I have a quick announcement before you guys. I almost forgot. Thank you so much, team. About the accountability program, unfortunately, guys, let me confess, we did get a lot of people for the accountability program, but then unfortunately, the system we have right now couldn't take a lot of people. Why? Because the accountability program, I have to hold people accountable myself one-on-one. And so we are creating a system right now that will not be about a challenge. You can easily just join and be held accountable just like that on a structured way. I'm not going to lie. Listen, this is not an organization that is pulling in, billions of dollars to create crazy, integrations here and there, like TradingView, whatever, whatnot. However, we as you guys can tell as well, in this community, we don't charge you guys for these master classes, none of that. And so sometimes, when we say be patient and we're going to create system, we are basically just saying be patient while we create these systems with our own resources as time goes on. However, we have still selected some few people that we are holding them accountable. They are going through their self-assessment test. They are already onboarding themselves with the brokerage. Every single thing, they are doing that. Now, if you are not able to get selected on this accountability program, don't worry. We are working very well with the team. Today, I was on a call with the team whereby we are creating the back-end office for the website. You guys will see the beautiful website. It's going to help those who want to be held accountable to be able to join also very well. Now, the accountability program is not a teaching mentorship program. It's a program for those who don't do what they say they will do. So accountability is not about me telling you to do something new. Accountability is me showing you what you said you would do and helping you to do what you said you would do. That is what the program is all about. So I'm super excited. You guys are going to enjoy it. It's full of testimonies already. Believe me, I promise you this. Now, we are going to kick off tomorrow officially. No, Monday officially. We're going to kick off with them triggering their trades and so on and so forth. So we are also documenting all of the journey so that we can share with the TP family with how people are making withdrawals. Even if somebody blows an account, God forbid, we will still share it. Because the truth of the matter is, not everybody will do what they are supposed to do anyways, and there is nothing we can do about that. So with that all being said, this was an announcement I wanted to give to you guys as well. And also, there is more announcement coming for all those in Dubai. We are preparing something. It's going to be like our first ever get together for TP family. Also as well, it's like an offline TP masterclass, but it's going to be like the first time for all those in the UAE. We will meet as TP family. We will have an amazing time, and we will document all of that as well so that we can show to the other people also in the different locations. And it's not just going to be in the UAE, also across different countries. TP family is going to come offline as well over there. And I pray and I'm hoping that God will help us to be able to establish all these plans consistently. So with that all being said, ladies and gentlemen, thank you so much for hopping on to today's masterclass. God bless you all and have an amazing evening. Bye-bye.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Fix your